What is up, everybody? How we doing? It is 11:31 on Wednesday, which means it is time for Benzinga Live. I'm Spencer Israel. My co-host, my co-pilot, Aaron Bree, will be here shortly. He's just wrapping up a phone call right now, I think. And so we miss him, and we'll see him hopefully soon. But we got a lot going on in today's show. We're going to talk about the Goldman Sachs' top picks for the year. We're going to talk about real estate. I'm excited for that. If you are, either if you're bullish or bearish real estate, we're going to have a guest who's going to try to convince you to be bullish real estate this year. Al Lord, he'll be our first guest on the show today. He'll be on at around 12:15 Eastern time. He is the founder of Lexerd Capital Management, a REIT focused investment firm. So we're going to talk about real estate with Al Lord at 12:15. We're talking Wejo. Did you guys see the news in Wejo from yesterday after the close? Wejo and Microsoft partnering up. We're going to talk to both of them. We're going to talk to Wejo and their CEO, Richard Barlow. And we're going to talk with John Stenlake, who is the Director of Vehicle Innovation and Mobility at Microsoft, all about this deal, what it means going forward. That'll be at 12:30 today, so an hour from now. We're talking options with Nick Chahine at 1 o'clock, and we're talking with Jesse Kaylor from Elite Trading at 1:30. In between all of that, we, of course, have news. We got movers. We got the chat. What's going on, Donkey Dave? What's going on, Chase? How we doing? Let's get this show on the road here, and let's get this show started and run my intro, if I can find it. This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a breaking news. Okay, I am back, myself and Mr. Costanza behind me. What's going on, everyone? How are we doing? How is the day treating you guys so far? What's up, Robert? Why's up? Stuck in 1999? I love it. Markets are okay. Yes. Markets mixed. This is what we say. This is like what they say on days like today. Markets are, quote, mixed, right? You got the S&P down a little bit. You got the Dow up a little bit, right? You got the NASDAQ. Tech is weak again. So there's that. But a decent amount of green littered across the screen, right? It's kind of the same story as yesterday, just not quite as pronounced, right? Yesterday we saw like value was really strong and some growth tech was really weak. Today it's not quite that bad. It seems like, but banks are still strong. Utilities, energy, industrials, defensive still strong, and a lot of tech, frankly, not strong again. So continuation, right? Curious what you guys are seeing. What's up, Matt, Master of Stonks, Kyle, Chris? Let me catch up on the chat there. Matt Miller, I had not checked that. I haven't looked at Ford in 2 hours. So let's look at Ford in a second. No, Chris, that's not a joke on Jason. It's just we have these we have these wood. They're not even cardboard. They're wooden cutouts of all the main cast of Seinfeld. I don't know why we have them, but we do. So, why not? I like George. He's my favorite character. What's up, Shelly? How are we doing? So let's do this. Let's start the show off with a real quick crypto update. And then I want to go into the stocks and stuff like that. But and then Aaron Bree is going to join us probably in the next 10 or so minutes. So I've been told. But that being said, let's start the show off today with a real fast. What's up? Missed you too, Planted. Missed you too. All right. Still mixed, right? Same story as this morning. Nothing has really changed here. I guess you can say Bitcoin, ETH, and Binance Coin have recovered slightly. They're not down as much as they were this morning, but still down. Solana is your leader on the downside today among your biggest coins, down 1.7%. Nothing really changed as far as crypto coins that are up, right? Chainlink, Uniswap. Wait a minute. Where's my mouse? There we go. Algorand and Polkadot are your 4 coins in the green today amongst your top. What is this? Like top 15 largest coins, top 20. So, yep, no real change. I'm sticking with my plan, which is just consistently dollar cost average into Bitcoin and Ethereum. I could be talked into taking a flyer on a different coin. I don't know what that coin would be. I think I'm not the kind of person that wants to have like 10 coins. But I've got the 3. I could get talked into another one if someone wants to talk me into one. I'm open to it. My mind is open. So is my wallet. But yeah, that's where we stand today. If you want some free Bitcoin, it's very easy to get free Bitcoin, folks. All you have to do is download the Voyager app, enter the offer code on the screen, Zing, Z-I-N-G, fund your account with $100, make one trade, and then they will send you free Bitcoin worth $50, 50 US dollars, that is. All right. That was fun. I'm going to pull up the Benzinga Pro, and we're going to look at stocks because we know that that's where the fun is. Oh, Shelly, I heard about Scam Coin. Wait, did you guys hear about that that Shiba? Was it a Shiba knockoff? Hold on, what was it yesterday? It wasn't a Shiba knockoff. It was hold on. It was up 200% yesterday. I'm gonna pull up the article on Benzinga. Yeah, Shiba dollars. You guys hear about Shiba dollars? Up 200% yesterday? I don't know. Does anyone know how to make a new like their own crypto? Because that seems to be like the easiest way to get rich. Like just make it crypto, have it go up 1,000% in a week, sell all of it, and that's that. I don't know. Yeah, Zing coin exists. The whole idea of Zing coin, Shelly, is that like there is going to be a purpose, like a functionality for that coin, right? It's going to serve as an incentive for example, liking the stream on YouTube, right? But it's not fully fleshed out yet. We're still working on it. That's a goal for 2022. Is Zing coin, and if you want to get your Zing coin, I'm going to put the link in the chat where you can get Zing coin. Really? It's benzinga.com/Zing. That's the link. I'll put it in the chat right now. benzinga.com/Zing. You want some Zing coin? There it is. What does it do? Well, right now, nothing. But it will do things. That's kind of the point. Project still being developed. Okay. Let's go to the stocks. Here's my Benzinga Pro. I've got AMD up there. I'm not really sure why. Let's get that. Let's go to the scanner. And we look at what's up, what's down from the open on the left side of the screen, on the right side of the screen, what's up, what's down in the last 5 minutes. How's Beyond Meat doing today? I don't see Beyond Meat at the top of my gainers from the open. That's a red flag. He kind of had a feeling. Let's pull up that Beyond Meat chart. He kind of had a feeling that Beyond Meat was going to be that they were going to fade that move. Let's see. Yeah, they're fading the Beyond Meat move. Look, we say this all the time, right? Stocks that are in uptrends, when they dip, those dips can be good buying opportunities. Stocks that are in downtrends, when they rip, those rips can be good selling opportunities. And that's what you have overnight / this morning in Beyond Meat. You had a rip in a stock that is in a downtrend. Every single rip in Beyond Meat has been a rip to sell in the last year. Let's pull up a weekly. It was the all-time high a year ago. No, it was not. It's a year and a half ago, or 2.5 years ago. But the stock has been in a pronounced downtrend for a year now. So, I mean, it's very simple, but that's how these things tend to behave, right? Good news, good headline, right? Beyond Meat products in KFC is nationwide. But the headline is one thing and the stock is something different. Stock is in a downtrend. Let's look at Ford here. Is Ford at 25 yet? No, it is not. It's darn close. Wow. That trade is still going. This really is wild. I'm bewildered by the whole thing. Let's look at Ford. Let's look at GM together. Let's look at Toyota together with it. And then let's look at Stella. Look at the automakers this year in the last 3 days. Look at those moves. Pretty impressive stuff. I mean, if you wanted to chase it, like we always say, don't chase. If you wanted to chase it, you would have to like you can buy any of these whenever, wherever you want, obviously. But I would be judicious with my stops, be them mental or otherwise, because you don't want to get caught, catching this thing 2% off its high and then watching it go down 10% in your face. But this is a strong move. There's no reason to short this stuff now, right? If you let's say you want to come in and be the hero and short Ford, well, you could. I guess theoretically you could stop yourself out at oh my god, I don't know. I don't know where you 20. I don't know where you stop yourself out. You stop yourself out at whatever your maximum loss limit is, right? If it's a percent, like 10, 20%, I don't know. Whatever you have, it's always a good idea to have some idea of whatever the most amount of money is that you're willing to lose on a trade. So if it's 10%, you stop yourself out at 10% higher. I don't know. I don't know how you short this though, right? Will it stop going up $1 a day? Eventually, yeah. But who's to say when? I don't know. 25 seems like 25 is a nice round number. Seems psychological. I don't know. What a monster. What a monster. Mitch shorted Ford. Yeah, Matt. That seems like a reasonable place to make a stand. Did Mitch short Ford? That's all right. I was not watching when he did that. I hope he's okay. I hope he made some money or he's okay. Donkin Dave, yeah, it's an interesting. I don't know, the idea behind Ford, this idea, we talked about this months ago, right? The idea is if you want to buy a quote unquote EV stock, why not buy the companies that already make cars, right? Wouldn't in theory wouldn't Ford, GM, wouldn't they be the leaders in EV production if they're already good at making cars? And it is affordable, right? The stock is affordable. Ford was $10 or whatever 4 months ago, right? So the stock is affordable. Tesla's not affordable for a lot of people, right? I mean, how many people do you know that are buying 100 shares of Tesla? It's just not a thing that most people can do. But you can buy 100 shares of Ford. It's less affordable now, but it's still pretty affordable. So that was one reason, Duncan Dave, and I'm with you on that. Just in terms of just affordability. Out of curiosity, what is Ford's PE right now? Ford PE of 11? Really? Wow. It's still so cheap. It is still so cheap. The Ford PE of the S&P 500 is 24, I think. Anything below that is cheap right now. Sorry, I'm just catching up here. Good. Mitch closed out his short. Nice. Good job, Mitch. Shorting rocket ships ain't easy, but if you make him look, he must have played it right off the open. Right there. Good for him. Nice trade. Sorry, I'm just playing catch up in chat without my co-pilot here. It's a little bit more difficult to talk and read the chat at the same time. Okay, cool. Nothing crazy. But yeah, drop your tickers in there, and I'll do my best to keep an eye on that throughout the show today. And we will take a look at stocks you want to look at. Calm Meow, Baba to the Moon. I don't know about that. Again, stocks and downtrends. What a move. See, this is where sometimes the stock market feels really stupid, because this feels like the kind of this move off the open is the kind of move that suggests that the stock is moving off of a news headline. Now, we know what the news headline was, right? It was out yesterday. That big old Greek candle from yesterday. Charlie Munger doubling his stake. That's what that was. So it feels like it moved twice off of the same news. What did we just say about Beyond Meat? Stocks and downtrends, when they rip, they can be good shorting opportunities. I don't know what the puts are like in Alibaba. But let's see if we can find if you want to go short here, let's see if we can find a level where you would stop yourself out, right? As a loser. What are we? We're at 125 now. I could see 130. You short it with a stop at 130, call it a day. That's not the worst idea. If you're buying Baba now, I think you're doing it backwards, right? He's just gonna walk in front of the camera. Just walk in front of the camera. I don't know if you can buy Alibaba right now, honestly. For a swing trade, on the long side. I really don't know.
What up, Spencer?
Is Aaron's mic on?
Is Aaron's mic on? Can y'all hear me?
Yeah, I hear
Can
you.
I just yell into your mic?
What's up? How we doing?
I'm good. How are you? What have we talked about so far today?
We talked a little bit of crypto. We talked a little bit of Ford, Beyond Meat, and Alibaba.
All right. Well, now that I'm here, let's get to the itinerary. What's up, everyone? Happy Hump Day, Wednesday. Why does it look so dark behind us? Is it dark outside?
Yeah, it's dark outside. It's gloomy. Michigan is Detroit's really gloomy in the winter. The sun never comes out.
Yeah, isn't there a word? The gray. It's I don't know, some word.
The sun does not shine here for 4 months out of the year, which is ridiculous. But anyway, Spencer.
I've got some good news for me, some bad news for you.
Okay, Palantir.
No. Whatever happened? Did you stop your trade on Palantir?
Yeah, Shelly, this is all your fault. Shelly was in the chat just sell, Spencer, just sell, just sell.
Always Shelly's fault.
Just sell.
Yesterday we were talking about Abbott. Abbott up about 1% today. Look at those options, baby. Up 40% in one day.
Nice. Good for you, man.
Hope someone got into those calls with me. Again, the thesis there was KISS. Keep it simple, stupid. People are buying rapid tests. I'm going to buy the stock of the company that makes the rapid tests. No need to overthink it.
Are you going to sell?
I mean, I don't know. I'm only up $46 on it, so
okay.
I might as well keep them in the off chance that Abbott really goes crazy, and then they'll go up a little bit more, and then I'll buy us lunch or something.
Shelly,
actually, you'll buy me lunch because we made a lunch bet.
Yeah, we did.
Shelly, remind us, what was the lunch bet again?
And Shelly, I'm just playing. Obviously, I own my own decisions here, and I feel justified in Palantir when the stock inevitably falls below 17.75 in the next hour or so. But yeah. I own my own decisions. Shelly, I think maybe you probably did make the right call. You probably saved me a nickel. I don't know, Shelly. I feel justified in an hour. Where was the bet? The bet was 140 to 120, I think, right? 140 you win.
I don't know. It was Shelly's.
It was 140
job.
It was 140.
Shelly got us in the chat. 40 up. Bree wins.
Yeah.
So all right, come on, Abbott. We need another, but it's not till next Tuesday. Next Tuesday.
Well, we said that was the end. The
Abbott. People are buying the rapid tests. I'm buying the stock. Let's go.
Yeah. All right. Can we get any I don't know.
Air horns?
Do it.
All right.
I don't know what I did.
Just do it. You did the Shia LaBeouf. Let's do it. Yeah. All right. So Spencer, I've got a couple things I want to talk about. So let's start with this story. It's been widely reported. It's being called the Great Resignation.
Yep.
So in November, 4.5 million workers quit their jobs. That was up from 4.2 million in October. That was from the Bureau of Labor of Statistics.
Department of Labor, the BLS,
something
the Bureau
like
of Labor
that.
Statistics. Yeah.
Anyway, most of the departing workers came from the accommodation and food services industry. So it's hospitalizations, restaurants, hotels, stuff like that.
You mean hospitality?
Hospitality. What did I say?
Hospitalizations.
I'm sorry.
Yeah.
I'm doing all this COVID research.
Hospitality.
Hospitalization.
Yeah. Restaurants and hotels.
All right. Someone, forgive me. Shout out Ruel in the chat. Ruel, go follow Ruel or subscribe to Ruel on YouTube if you don't already. He's got good.
What up, Ruel? How we doing?
Good crypto content there. Anyway, healthcare sector after hospitality, not hospitalization. The healthcare sector
was the second.
Saw 52,000 more quits in November than October. So that's telling us that nurses, nurse practitioners, PAs, doctors, just hospital workers in general, more of them quit in November than October.
Did you see what the Mayo Clinic did yesterday? The Mayo Clinic officially fired the 1% of their staff who didn't get vaccinated. So that's 700 people or so.
Yeah, and honestly, that's totally businesses have the right to do that, to do what they please, First Amendment, all that. But it is surprising that in this day and age, not day and age, but right now when we're dealing with this shortage of healthcare workers, that they feel adequate, that they feel adequately staffed enough that they're able to lay off. And 1% is not a huge percent of the workforce.
1%.
But and that was a big talking point for people that were against businesses implementing these vax mandates. Is they were like, oh, they're going to lose so many workers that refuse to do it. But what happened is it was a very, very, very small percentage of workers that actually ended up refusing to get the vaccine and then left their job.
Yeah. At Benzinga, we had almost we basically didn't have any sort of vaccine or stay-at-home policy at all until somebody decided to come into the office with COVID. And that's somebody may have been me.
Spencer.
May have been me. Anyway, moving on.
Either way, this is a trend that we'll have to, keep watching. Remember the report that came out a couple months ago, Spencer, where people were saying, 4% of people quit their job because they made enough money on crypto.
Yeah.
I don't know. There's a lot of reasons for people to get up and leave their job. So again, we'll just have to follow this story, see how things progress. It is a tight labor market out there. So for people that leave their job that will then be looking for a new job, I'm sure a lot of them will be hired very quickly considering the tight labor market. But yeah, I mean, again, we're always looking at these economic numbers. One that is very important are the new jobs and unemployment that's reported each month. So
right. So today, it's funny that we got this data. I mean, it's lagging, right? Because the data is from November. But this morning, we had ADP payrolls, where private payrolls, how many jobs were added across ADP's survey, right? ADP is the payroll company, and they do this. They do these surveys every week or every month. I don't even know anymore. Anyway, it was a huge beat. There was 800,000 jobs, private jobs added versus a 370,000 estimate. So way more new jobs added or jobs gained from ADP's survey last month than expected. So that can be an indicator for Friday, which is of course the employment situation summary, the actual jobs number that's probably most important. How many jobs overall were added last month? What is the unemployment rate? That sort of thing. That'll come out on Friday. But it's just interesting that you have this trend where, on the one hand, November, 4.5 million people quit their jobs, and on the other hand, in December, according to ADP, 8 million new jobs added. So pretty crazy dichotomy there. Labor market is always a funky thing. It's doing weird stuff right now. But I'd be curious in the chat. You want to drop a 1 if you have left your job in the last year for one reason or another. Put a 2 if you've thought about it. I'm just curious. Put a 3 if you never had a job. That's cool too.
That's where I'm at.
That's where you're at. Some days I do feel that way. So
about yourself or myself?
Both of us.
Okay.
Yeah. Anyway.
All right, moving on from the Great Resignation. So we got a report from Goldman Sachs that highlights 21 stocks that Goldman Sachs sees offering explosive sales growth and fat margins through not only this new year, but through 2023. So I went and delved into this report of 21 stocks and pulled 10 of them.
Are these your 10 favorites of the Goldman Sachs' favorite, or these are just 10 that you thought were interesting?
These were 10 that I thought were interesting.
Okay.
We're not going to spend too much time talking about each one just because there's a lot, but I'm going to run through them real quick. And Spencer, if you want to pull up your Benzinga Pro, you can pull up the chart while I do that. Some of these names are very, big names like Zoom, Facebook or Meta platforms, and Nvidia are on the list, but some are kind of lesser known names. Like some I'm not, like I've heard the names before, but aren't too familiar with the stocks. But let's just go through my 10. And
wait, so again, these are Goldman Sachs' what? Their picks for the year?
They are stocks that they see, companies that they see offering explosive sales growth and fat margins through 2023. So again, not just through 2022, but 2023.
Okay. So Goldman is saying they're seeing these are the companies that they're picking that are going to have good fundamental growth, but that does not have to translate to stock growth. But in any case, let's proceed.
Let's proceed. All right. So I'm going to read the company and then also the expected consensus estimate for the 2023 profit margin.
Okay.
So that's what we're looking at. Like you said, the fundamentals of, the sales growth, profit margin, etc. First on the list, MP Materials.
Look at that chart.
2023 estimated profit margin, 48%.
Look at that chart on MP.
So yeah, you can see the strength there in MP. Goldman is essentially saying, again, like you said, Spencer, not just Voodoo, I hear you. They're not calling these stock buys. They're saying these companies they're estimating them to have explosive growth and high profit margins. So that's all we're talking about here. I'm not saying all these stocks are going to do really well.
These are names that Goldman likes fundamentally. They're not saying these necessarily the stocks have to outperform.
But what that tells me, Spencer, is that in a kind of value dominant environment, if we get to that point, that these stocks will do well because they have strong fundamentals.
That's how it's supposed to work in theory.
In theory.
In practice, who the hell knows? But in theory, yeah, that's what they're saying.
All right. So MP Materials, again, you can see the strength there on the chart. Goldman's essentially saying they expect MP to continue high profit margins. Moving on, MasterCard.
MC. Oh my gosh, MA.
Yeah. What'd I say?
MC.
I don't know. Who's the MC?
Is MC a ticker?
No, I'm saying who's the MC? Like Ryan Seacrest was the MC of American Idol. Anyway.
Okay, bad joke. MasterCard got taken out back at the end of the back half of last year. The stock has recovered though. Look at this recovery in MasterCard. Wow. Have we almost regained the all-time high? The all-time high was hit last summer. No, it was hit last April of 401. We are within shouting distance of that now. We're 377. All right, we've gone from what was the low a month ago. We've gone from 306 to 377 in a month. Very nice run.
Yeah, and one thing I do like about MasterCard right here is, again, you can see the recent strength in the chart, but MasterCard and some of these other financial, MasterCard's a different stock than, a big bank like Goldman or JP Morgan, but I think MasterCard and Visa and the other credit card stocks can benefit from a high inflation environment.
And how so?
Because you're spending more money, so you're paying more interest. Inflation equals good for credit cards. All right, that can be
all right. Okay, maybe I could see that.
All right, moving on. United Therapeutics Corp.
What is the ticker on that? United.
The ticker is USD. UTHR.
UTHR. All right, not one that I know here.
Yeah, this was one of those ones that I didn't really recognize on this list. But anyway,
okay.
They're expecting a 2023 profit margin of 42%.
I don't even know what they do, but all right.
Probably something in therapeutics.
Well, thanks. That was insightful.
Yeah, see, Duncan Dave gets it. Rates will go up. MasterCard will increase interest.
Okay.
All right, Aspen Technology.
Also not one I'm super up to snuff with.
AZPN. Alpha, Zebra, Penelope.
See, all right, this is why I love Benzinga Pro. I don't know what this company does. All I do is I go to the details widget. I go to overview. Okay. Oh, look, they're a software play. Do we have more about the company? Oh, look, Aspen Technology is a leading global supplier of software solutions that optimize asset design, operations, and maintenance in complex industrial environments. Okay, so it's a SaaS.
You had me at leading global supplier. Buy.
SaaS
I'm just kidding.
platform.
This is
All
not
right.
for investment advice.
AZPN.
Universal display.
OLED?
Universal display.
I've looked at OLED in a long time.
Again, this is one that I think can do if we see the outflow out of growth into value, which we're currently seeing right now. This is one that I think's got strong fundamentals that can do well in that environment.
Key thing here is Apple supplier. That's
all you need to know.
All you need to know. Apple supplier.
2023 profit margin 38%.
Apple supplier. That's all you need to know.
All right, moving on. We're getting a little outside of the value trend here and into some more growth.
Okay.
NVIDIA. Ticker NVDA.
Is it down today? It is down today. It's down with the rest of tech today. The rest of growth, but yeah.
2023 profit margin for NVIDIA expected to be at 38%. So I don't know. I mean, I love this stock. This is one that's in my long-term Roth IRA that I never plan on selling. Do I think it's a little overextended here? Sure, maybe. Do I think it could go down in the short term? Yeah. Do I think it'll be higher a year from now today? Yeah, I do. So
you could definitely convince me to be a buyer at whatever that is, 270.
All right.
I know we're at 285 now, but at 270, yeah.
Let's do it.
I bet you got some orders in the book at 270.
Hey, Rohan, can you do me a favor?
Producer Ron,
what's up?
Can you click the little tweet thing up there so I can see the chat?
Yeah, I got you.
Thank you, sir.
All right.
I love that guy.
What's next?
Right, Marvel Tech.
MRVL.
Yeah, and this one is a kind of a retail investor favorite, or was at one point.
Okay, I didn't know that.
I think, right?
I don't know.
All right. Anyway, profit margin expected in 2023, 35%. Spencer, can you read us the company description for Marvel?
I mean, it's a semi play, isn't it? That's what semiconductors. Let's go to the overview page. Come on, computer. Overview.
That sounds right.
Yeah.
We got another semi play coming up too.
Yeah, they're chips. That's all.
Can you guess the next semi play?
AMD.
Nope.
Micron.
Nope.
Lattice.
Yep.
Really?
Yep.
Oh.
2023 profit margin expected 34%. Next on the list is Autodesk.
ADSK.
Yep.
Okay. How's that stock doing? Whoa. Whew. Okay. Well, it's come back nicely from the lows of a month ago, but sheesh. I think I remember when that gap down happened. That was brutal. That was a really tough week.
And the last one, my 10th one of the 10 that I pulled from the Goldman Sachs list is Monolithic Power System.
Give me a ticker.
All right.
Monolithic. Oh, I got it. MPower. MPWR. All right. Not one I'm familiar with.
2023 profit margin expected 31%. So I'll drop these 10 tickers in the chat. Again, these are not, stock picks per se from Goldman. These are just companies that they see as having explosive growth, sales growth, and good profit margins heading into not just 2022, but 2023 as well.
All right, it is 12:05. So again, just to run through the plan for the day, we're gonna talk real estate. Someone in the chat asked about real estate. We're talking real estate with Al Lord in 10 minutes or so. Al is the founder and CEO of Lexerd Capital Management. So we'll hold off on that until then. At 12:30, we're going to be joined by Richard Barlow, the CEO of Wejo, talking about their partnership with Microsoft, the Wejo Neural Edge platform news that was announced yesterday. We're talking options at 1 o'clock with Nick Chahine, and we'll have Jason Kaylor on at 1:30.
Happy hump day. Woo!
Okay, give us his trades. I don't know if y'all heard that, but
that was Luke.
Oh, I got word from Luke yesterday because we asked for feedback at the end of last year, and we got a lot of people said we want more Luke. Luke told me that he has put time on his calendar now, basically every day, to try to make time for this show. I don't know if he'll come on every day, but he said he put standing time on at like noon to hang out with us for like 5 or 10 minutes. So going forward, I hope Luke comes on more than he has been, at least on a recurring basis. But he's a very hard person to track down because he's always in meetings. But we're gonna get more Luke on the show. Thank you to everyone, by the way, who sent us feedback. We have all of it. We got a lot of great notes, some not so great notes, but mostly great notes about what you like, what you don't like. More Luke was a theme. More Neil was a theme as well. We'll do our best to get Neil back on. We had a lot of good ideas for other shows we're not doing. So thanks to everyone who filled out the survey that we threw out last week.
Yeah, everyone except for the person who said get rid of AB.
We had one person say get rid of it, or maybe two, and we definitely had a few people say get rid of Spencer. So fine, we can do that. Those things can be arranged. But in all seriousness, thank you to everyone who played ball and participated.
Voodoo, no, Raz did not get us some Wingstop, but if you want him to, send an email to jason@benzinga.com and say, hey, the office needs Wingstop.
That was also a theme. People miss Jason. Can we get Jason back on, Aaron?
Not in January.
Not in January?
Maybe after.
Do you even know where in the world he is? I have no idea where he is.
Yeah, he's back.
Is he
in the area, I think.
He's in the area?
Yeah.
All right.
Well, he was.
Okay. Last I heard, he was in the Virgin Islands. That's all I know.
Yeah. All right. I saw a couple of people mentioning Cathie Wood in the chat. Spencer, let's do a quick check-in on ARKK. I think another down day.
Well, yeah, tech is down, so ARKK is going to go down with it.
Yeah. But
I saw she bought SE yesterday. She bought the dip.
SC?
SE.
Oh, SEC Limited.
Yeah, she bought the dip in SE. Ouch. Oh, wait. Look at that. SE is actually up from the open. That's interesting. Anyway.
Yeah, Martin, that was... Spencer not only didn't just kill SPAC's attack, but like the whole industry of SPACs. If you're wondering why SPACs aren't as hot as they used to be, he's your guy.
I did not kill
Spencer.
I did not kill SPACs. I would love. I've said it on the air. I'll say it again. I would love to have more. Right now, we're doing very little SPACs content. I would love to have more. I just want to do it in a way that is good for everybody and fits with everyone's schedule.
All right, but okay, so let's talk. So you just mentioned Cathie Wood bought the dip in CE. I've got some other moves she made that I have pulled up. So, Tesla, Cathie Wood and Tesla in a lot of ways have become synonymous with each other, right? Cathie Wood essentially, her claim to fame was that, she threw out that ridiculous price target on Tesla. Everyone made fun of her. She was vindicated in the long run. She ended up being right. I think she said it was going to hit $800. That was like pre-split. It's actually at like $3,200, whatever in those pre-split numbers. But, one of the things that she famously does, that ARK famously does, is they email out all the moves they make. So she sold more Tesla stock. The ARK investment firm sold 39,000 shares worth about $45 million at the start of Monday, trading from 2 ARK ETFs. What did they do with that money? You ask.
They used it to buy the dip and everything else.
They used it to buy Teladoc. They used it to buy, Teladoc and Palantir were the two big ones that they allocated money into.
Palantir. 1785. Go lower. Just so I can feel better about myself. Okay, so she bought the dip in Teladoc. Teladoc, that chart, man. There are very few charts that look as bad as this one to me. It looks terrible. And when I had COVID and I was using a telemedicine, we used Doximity. I used Doximity DOCS, right? That chart also.
Jimmy in the chat, what's the ETF that goes against Cathie Wood? That's SARK. You can remember that just by short ARK. SARK. A lot of times the S in front of a ticker indicates that it's a short. SQQQ is the short version of QQQ. Voodoo.
SARK is only going to work as long as growth remains out of favor. The second it gets in favor, Sark is going to go down. But anyway.
Yeah. Voodoo, thank you. I don't know which solo interview you're talking about, but I appreciate it. All feedback is always welcome. I'm going to throw our email up on a screen that you can email us for feedback. We, a lot of times the more constructive feedback, the constructive criticism is more helpful. But if you think we're doing a great job, then sometimes it's nice to hear that too.
Oh, Shelly says you've upped your research game.
I have. Speaking of, I've got more research.
More research?
Yes.
Okay.
CryptoPunks, have you ever, or not CryptoPunks, the other one.
Apes?
Bored Apes, yeah.
Yeah, okay.
I did some research on Bored Apes.
Yeah? You buying one?
No, well, I don't have enough money for that.
I know, I know. They're expensive.
Maybe if I do well with options this year, I'll be able to buy a Bored Ape.
They ain't cheap.
But do you know who did?
No. Kanye.
No, maybe, but that's not. I've got two names on here. One is a
Kramer.
Who?
Jim Kramer.
Oh, for some reason you said that. I was thinking about Kramer from Seinfeld.
Him too.
Yeah, Kramer from Seinfeld bought one, not Jim Kramer.
Okay.
No, I've got two guys. One's a rapper. One's a basketball player.
Okay, Drake.
Nope.
Kevin Durant. I don't know.
Nope.
You
might have one.
We'll do this all day. I don't know. What? Tell me.
Steph Curry.
Okay, he bought a Bored Ape.
And Eminem.
Eminem.
Both acquired Bored Apes. I believe Eminem changed his profile picture.
Can I have a question?
Oh, Ruel knew. Shout out Ruel.
Wait, can I have a question? How do we know this? Like, how do we know that they did they have to announce it? Right? Like, how do we know?
So I don't know if you see the latest thing on like NFT Twitter and stuff is that people are getting upset that some people are making their like profile picture on Twitter an NFT that they don't actually own. They're basically saying like you can only do that if you actually own that NFT, but other people are like, I can do whatever I want.
This is the stupidest thing I've ever heard. There are no rules on the internet.
But anyway, sales of Bored Ape Yacht Club NFTs have passed $1 billion officially. So yeah, I mean, if you're someone out there that maybe you make digital art out there and your parents are like, oh, when are you gonna get a real job? You can tell them, hey, look, this digital art has passed $1 billion. Well, digital art as a whole has way past $1 billion, but just specifically Bored Ape Yacht Club, that one project of NFTs has passed $1 billion. So that's significant, Spencer.
Well, Peso, my question was like, I know you can see the transaction and you can see the wallet, but it's not like it says on the blockchain, oh, I'm Steph Curry. Like, it doesn't say that, right?
Yeah, Ruel was right. I mean, Ruel, we could play this game all day where you told me about something. I mean, Ruel told me about Cardano when it was at like 40 cents or something, and then I didn't listen to him. So I don't know, Ruel. I'm sorry. I should have listened to you. I should have bought a Bored Ape Yacht Club the first time you brought it up.
Let's but you can play that game all day and you'll never be happy.
Dude, you know what's gonna happen this year?
No.
Some kid like back when we were 13 is going to have their bar mitzvah and spend all their bar mitzvah money on an NFT.
Sure. I'm with that. Let's find out how our next guest feels about NFTs. Al Lord, I have no idea what he knows about NFTs, but maybe
well, he's in capital management.
Maybe we'll find out. Yeah, that's true. Okay. Al Lord is the founder and CEO of Lexerd Capital Management, a real estate firm. We're going to talk mostly about real estate, but I am curious as we bring Al on the show right now. Al, do you or do any of your children or anyone have any NFTs?
I do not. I certainly wish I did. I wish I had bought Bitcoin in the years past, but my kids own Bitcoin and they trade in and out of it, and they do have NFTs. I haven't figured it out, so I've stayed away. But I wish I had owned it.
Sticking with what you know. I like it. All right, Al, make the case to us for the real estate sector this year, and then we can get narrower within that. But make the case for real estate this year.
Okay, well, I think you need real estate in your portfolio as an alternative to fixed income at where we are in the markets. I mean, real estate has always been a piece of the overall puzzle for everyone's portfolios. But it's, in my opinion, it's too small of a piece that at least of the major brokerage firms, everyone that recommends these balanced portfolios, they don't recommend enough real estate. But especially where we are in the markets right now, I think real estate is incredibly important. and will continue to outperform the markets. And it's had if you look at last year alone, obviously we had another very good year in the stock market. You had the last 3 years of double-digit growth. But if you look at what real estate did overall, real estate market was up 37%. And so that was the best year for real estate since 1995. And while you don't mind being in the stock market and having 25-26% returns, real estate beat it last year. And
so,
I'm sorry, go ahead.
Yeah. So is that referring to just U.S. REITs? What is that 37% number? What is that about?
Yes, that's U.S. REITs overall.
Okay.
So that includes a broader range of REITs. So you have houses, you have apartments, and you have houses for rent. You have logistics and storage and industrial and office. So that's overall real estate market.
Okay. Are there specific subsectors though that you like more than others? Commercial, multifamily, resident, whatever.
Yes, certainly multifamily at this point. Multifamily gives you great inflation protection, and there is a shortage of housing, both single family houses and apartments. And apartments are a safer way to play it, but apartments are set to continue its growth. If you look at last year alone, the apartment REITs were up 55%, and you're still getting above average dividend yield. If you only own the apartment REITs, you're still beating the S&P 500 dividend yield. And
can you give us some tickers?
I'd say Camden Property Trust, CBT. There's Mid America, MAA, Aimco, AIV. There's 8 or 9, but those are my 3 favorites.
Trying to pull up one of them right now. You said AMA?
AIV. It's CPT.
AIV,
yeah, Camden Property Trust.
Oh, that's the market. It wants you to pump up REITs more. The market's calling you right now. Here, so there's AIV right there.
Maybe they're asking for me to sell me some Bitcoin.
Maybe. Al, do you have specific barometers or gauges or data inputs you look at in terms of like what makes a REIT attractive aside from obviously its category?
Yeah, I mean, you certainly want to be in the proper location. And so when everyone jokes that real estate's about location, you certainly want to follow the trend of the population growth, and the population has continued to move to the southeast. Texas and Florida have been the big beneficiaries of population growth, but the entire southeast and the losers in that have been the Northeast and California. And so the Camden Property and MAA that I was just talking about, they're in the Southeast. That's where the growth is. That's where population continues to grow. That's where the jobs are. And that area is set to continue to grow.
What about, we talked about there being a shortage of homes right now, and that's obviously that's been the case, frankly, for probably a decade now, and it's coming home to roost. What about if, I don't know if this will happen, but like if the residential real estate market were to cool down, because it's been so freaking hot and it's frankly amazing. What if that were to cool down for a quarter or two? What would that do to your real estate thesis?
Yeah, well, I think a lot of home buyers out there are hoping it does cool down for a little bit.
Yes, I'm one of them. I'm hoping it cools down.
But you're right. It's been more than a decade that we've had a housing shortage, and it's really born out of the last Great Recession. There was a lot of pain that was felt all around, and so since we've come out of the Great Recession in 2009, there has been a shortage of housing, and developers are continue to be risk averse and just not building enough houses. And then, on top of all that, we obviously have COVID, and we now have the supply chain issues, and that's making it worse. And so the housing market isn't going to cool down anytime soon. It won't continue the pace it had last year. I mean, you've seen across the country housing prices rise 20 to 30%. That's not going to happen again this year, but housing prices will continue to rise. But yes, at some point, there will certainly be a cooling off. It won't be anytime soon. But I think, the issue for right now is you need to protect yourself against inflation. Coming into 2021, we were looking at consumer prices that were rising 1.4%. And so, no one was really focused on inflation, but it happened. It happened quickly. The Fed said it was only transitory. They've since changed their stance, but inflation's here, and it's painful, and it hurts everybody. The Wharton business model shows that the inflation cost the average family $3,500 additional expenses last year. That's an issue. And so if you're holding fixed income, for instance, and you're getting a low yield, you have negative interest rates there, given where inflation is. And so, the ability to hold real estate will help you with that. You get an above average dividend, but ideally the dividend is outpacing inflation and you're getting some kind of growth. But importantly, you're going to give yourself inflation protection. So back to apartment REITs, apartments are able to raise their rents as the lease expires. And so all those renters that had their, had cut leases a year ago, well, as they come up to renew, those prices are jumping, 3, 4, 5, 6, even up to 10% because of inflation. And so if you're the landlord and you're the owner of a REIT, you're going to see increasingly higher rents that are coming in the door as these leases renew, and that's important for your inflation protection.
How does a rising rate environment impact REITs?
Yeah, very good question, and that will be interesting because rates will rise here, and so that will have an effect on cap rates. What the way to protect yourself, so personally, if you're doing this and you have your house or you have a vacation rental, you certainly want to refinance right now before rates start to rise. There's been a bit of a run up here to start the year, but rates are still low by historical norms. And so you want to lock in your interest rates here if you can. So if you're an apartment REIT, sticking with the apartment, idea, as a landlord, you're able to lock in long-term interest rates at very favorable numbers right here. And so if you're a homeowner, your mortgage rates are about 3%. If you're an apartment landlord, you're locking in rates now, and then you're able to raise your rents as you go forward. And so your biggest expense as a landlord is the mortgage. And if you're locking in rates now, you're going to have a great run as inflation increases your rents. But ultimately, the higher interest rates will affect a cap rate. And so the cap rate spread to where the 10-year treasury is, may change a bit. And so that'll be interesting as it plays out. But there's still a lot of room to run before we get to much higher rates.
So the bottom line is higher interest rates from the Fed trickles down through the rate environment, right? And does what to the performance of REITs?
Well, it hurts and it helps. And so the inflation piece of it. So the Fed is raising rates here only because of inflation. There's been the QE, the fiscal stimulus, the monetary stimulus here has been large. So the Fed has obviously stated they're going to end the bond buying, and so the market expects that to happen in March, and then they will raise rates only to cool inflation. The Fed has been pumping the economy here and pumping asset prices for a long time, and they've been behind the market. They said inflation was transitory. They were behind the market there. So they're going to raise rates to stop the inflation. Inflation, as we talked about, will help your rents. and so your revenue will be much higher due to inflation. Now, as rates rise and your new borrowing costs are affected, that starts to hurt, but there's a lagging effect, and so overall higher inflation will help real estate.
The chat just mentioned, I don't know if you're familiar with this one, but the chat just mentioned ticker NYC. Are you familiar with that? The New York City REIT?
Yes.
Have you seen that this year? Look at that.
Yeah, it's crazy.
Yeah. What's going on? What's moving right now? Do you know what's going on here?
I don't know. I wish I knew. It's New York City is a whole different animal, and it used to be the prize possession is to say you own real estate in New York City. Obviously, that's changed with COVID. It's changing a bit with crime. It's changing a bit with population growth. But New York will always be New York. It will ultimately come back, but it's not a great place to be right now still.
And then we'll just do one more from the chat. Do you know CLPR?
I do not know that.
Clipper Realty. Okay. RM then answers your question. Does not know about CLPR. We could probably do this all day with Al. But Al Lord is the founder and CEO.
A lot of this stuff.
Yeah. Al Lord, founder and CEO of Lexerd Capital Management. Al, appreciate the time as always. Real estate does not get a lot of love, a lot of attention, but a valuable sector, a potential portfolio saver in a rising rate environment or inflation environment, which we're in right now. So thanks for the time, Al, and talk to you later.
All
right. It is 12:28. Here's what we're gonna do in 2 minutes, and I'm getting a phone call right now. Sorry about that. It was a Slack call.
Go ahead and take it, Spencer.
No, I don't want to take it was a Slack call. I'm not going to take it. But we're gonna have Wejo on the show in the next 2 minutes, talking about data, a lot of data, and what they're gonna do with that data, and how they're gonna use Microsoft.
Beautiful.
For their data. So that'll be in a couple minutes from now. Always keeping an eye on the chat, seeing what you guys are watching. Let us know if you want more of like that kind of stuff, more like sector discussion, right? If you want to bring on someone who can like talk about the bull and bear case for biotech. I don't know, the bull and bear case for semis. I'm all for free market and all that stuff, but like the idea of people like buying houses as an investment and then it like drives house prices up to a point where like people like you and I who are like working and can't afford a house, like it rubs me the wrong way. I mean, well, okay, so that's yes, but one does not necessarily impact the other. No, like
I think like BlackRock, those like big firms coming in and buying up real estate certainly has an impact on prices.
You're referring to like private equity firms investing in like single family homes.
Well, not even just that. I mean, it can be some real estate mogul that goes out and buys 10 houses and rents them out. Yeah,
so that's a relatively new thing that's happening in the last couple of years, right? These people are using like I feel like it's relatively new, single family homes as an investment instrument where they rent them out. That shit flows downhill.
Well,
right?
You can but I have a buddy whose family is like really, really wealthy. I'm not even gonna say well-to-do. They're wealthy, and the dad they're from Kansas City. The dad essentially bought like a bunch of single family homes in some not so nice areas of Kansas City, and is a landlord. Yeah, but he's like the definition of like a non-predatory landlord. He literally like gives people amazing rates to the point where he's like that's not even his real job. Like he like makes enough money off his real job, and he personally he vets these families, and he's like, yeah, as long as they're a good family, I'm gonna give them like. But it's like, okay, that's the minority of landlords. Like most landlords are doing it to make money.
It sucks.
And I mean, and there are other ways, like we just talked about, through REITs, through commercial real estate, that you can invest in real estate. And I would just love to see people that want to invest in real estate do it in those ways, as opposed to buying homes that could otherwise be on the market. And thus, when there's greater supply on the market, it brings prices down. And I mean, the millennial, like the home ownership percentages of like people who own homes at 30 now versus like 20 years ago it's crazy. It's like staggering the difference
Yeah.
Of that percentage.
Well, and what's interesting too is there's this like divergence because on the one hand, homes are way like monthly payments are way more affordable now than they ever have been because rates have been so low, right?
Like mortgage payments.
Mortgage
payments. You're
payments.
not saying rent payments,
right?
Because there's a big difference.
Sure, I'm talking about own mortgage. But on the other hand, the barrier to entry, i.e., the down payment, is so high that it sort of it creates this weird dynamic where like if you already have a home, if you already have a mortgage, then you're probably doing better now than your parents were doing, right, when they had their mortgage, in terms of just like the amount of your paycheck that goes to your mortgage every month, right? Assuming you have a home that you can afford, because low rates makes it affordable, but the barrier to entry for people like you and me is just so much higher. There's gonna have to be something's got to give, whether it's millennial, not whether it's boomers, selling all their homes finally. I don't know. I'm sure that's part of it, but like, there's so many factors at play. I don't know the answer. I mean, the answer is obvious. The answer is we need more homes. That's the answer, but it's not going to happen, right? I think the home builders got burned so bad in 08, 09 that they're just not going to do it. So I don't know.
Well, yeah, I mean, yeah. With all that being said, I mean, you like for someone like yourself, you should have gotten a mortgage during when interest rates were so low, right?
I mean, yeah. If I was looking to buy a house like right this second, which I'm like not, but I'll be in the housing market in next couple of years. I spent a lot of time on Zillow and Redfin just messing around, right? Just looking at houses.
Well, you can use an FHA loan, which is a first time homeowner home.
Yeah, you know what? I've actually
which caps the down payment at like 2.5%. So if you're looking at a $250,000 house, your down payment's only $10,000.
Yeah.
So the FHA loan is very, it's very good. It's a very good thing that I don't think a lot of people know about or utilize.
You know what I've come around on? There was this company that called Unison. I used to think this was not a good idea at all, where they will match your down payment in return for equity in your house. And I used to think that was like a terrible, like, why would anyone do that? But now I'm thinking like, that's not like, assuming you don't need to, assuming you're not banking on your home equity to for your retirement savings, I'm assuming you have other sources of retirement savings, then that's not a terrible idea. They help you get over the barrier, the down payment barrier, and yeah, you give up a nice piece of the pie.
But wait, do you down the line like pay them to buy the equity back from them, or do they always own equity in the house?
I don't actually know. I haven't like looked too much into it.
Deepa say never give equity. I feel like that's
no. But again, the problem here is people can't afford down payments.
Here we go. Okay, Jesse Elite, who's going to be on this show here in about an hour or so, I believe. Hit it right on the nose. I feel my parents weren't thinking of real estate as an income and investment. It was shelter and necessity. That's what I'm saying. I was saying I'm all for free market. I'm all for investing, all this stuff. But it kind of rubs me the wrong way when people are like buying homes and then there's less homes on the market as an investment. And he's saying, yeah, now you have 20-year-olds like buying and flipping properties. I don't think that used to be it was such a hustle mindset, like, oh, go watch Meet Kevin on YouTube and we're going to make $1 million flipping properties. Where if you want to invest in real estate, there are other ways to do it, through the REITs, through commercial real estate that are multifamily buildings and stuff, that you can invest in. So I don't know. That's just my take, my personal opinion. Doesn't matter. Doesn't mean anything. But
Easy Mike just mentioned Fannie and Freddie in the chat. Easy Mike, I don't think he said he's long. I don't think you're entitled to any corporate profits. Fannie and Freddie are controlled by the government.
I was so young when that happened. I thought like Fannie Mae was a person, Freddie Mac was a person, and Bernie Madoff. Like, to me, they were all three. Like,
Fannie and Freddie they're government controlled entities, right? Government sponsored entities, right? I don't think you're not entitled to any like revenues from those companies. So, yeah. You should maybe, unless I'm wrong, but I'm pretty sure nothing has changed on that front. Yeah.
Again, that's just my opinion. I I promise I'll always keep it real with y'all. I'll speak my mind, even, I know that might not be the most popular, opinion. I don't know what that would look like in terms of regulate. I assume we're never going to see that in the United States, some sort of regulation that would cap, home ownership per person, something like that. That would be very.
Yeah,
I would imagine I would imagine that would not go over well.
It probably feels shitty when you when you make a bid on a house and you get outbid by Zillow or BlackRock.
Yeah,
that probably feels shitty.
Yeah.
I don't know the solution. The solution is, I don't know. Like, that's probably a bad feeling to have.
Yeah. The Hex Pony's got it. I went to school with Freddie Mac. It was me, Sloan Kettering, and
Johnny Hopkins.
Johnny Hopkins.
Yeah, you're welcome. Someone asked about Wejo. Yeah, Wejo is supposed to be coming on. We have an email out.
No, Spencer.
What?
It's 12:45.
Oh shoot.
Yeah.
Oh, my bad. I'm off by 8 minutes.
Come on now.
Sorry, 12:40. I thought. What I think it's 12:30.
I don't know. I didn't correct you earlier.
12:45.
I figured. Oh, Spencer said it. It must be right. But
yeah,
I guess not.
Yeah. Anyway.
Oh, J.R. House in the chat. He should have some insight for us into this. Yeah.
Yeah. There. I'm sure there's like some regulation that would be helpful, but I don't know.
Well, that's always the question, right? It's always about like, how do you regulate that? How do you implement that in policy? Because we can all agree, it doesn't matter what side of the political aisle you're on. We can agree there are problems in our healthcare system with the way insurance companies work, and then it's all about like, okay, how do you actually want to tackle that issue? What's your tolerance for like what you're willing to see in terms of regulation?
Yeah, housing market is kind of the same way. It sucks. I mean, I'm in a camp of I'm getting screwed real bad right now because I'm getting priced out of the market.
Right. And that's what I'm saying is I have friends that are my age, mid-20s that are on both sides of the political aisle that are pissed about what's going on with the housing market right now. And it's like, okay, we can all agree on where these problems are. It's about like, how do we solve them?
Yeah. I don't, again, that's why I said, like, I've kind of come around on and we'll move on, but I've come around on the idea of like, okay, I'll give up some equity if it means.
No, don't do it.
Wait, listen.
So what is this? This Unison company is hoping that you default on your mortgage payments so that they can. Why else would they want equity then?
No. Again, if you're not banking on your home equity as your source of retirement, if you have other retirement savings and you're willing to give over a piece of the pie, it's not for everyone. I'm not even saying it's for me. I'm saying I'm coming around to the idea, but the company is out there, and it's a trade-off. It's a trade-off. You're trading off money down the line for a down payment today. Maybe you leverage them to get a better house, a bigger house. I'm not saying to do it. I'm just saying for some people, they may want to think about it. I've sort of come around on the idea. It's definitely a trade-off. Some people are probably thinking, no, I would never. I used to be that way too. When I heard about this company 5 years ago, I thought, why would I ever give up equity in my house? That was before I got almost priced out of the housing market. So bottom line is down payment remains the biggest hurdle for everybody. I'm just saying. Think about it. It's not for everyone. Anyway, okay, let's move on here. It's 12:40, so we're gonna have Wejo on in 5 minutes. To whoever asked about that, yes, hit that like button. Thank you, Easy Mike.
Mike's got a good point. He says, "What do you mean by problems? Big pharma is making money and lining the pockets of politicians. The system is functioning properly."
Mike,
all right,
get outside.
We'll get back to the markets. Get off politically. But my biggest problem with the healthcare system is just the fact that someone that has a job and has insurance,
okay, you want to
hear, still be bankrupted by healthcare charges.
Okay, so you want to hear what happened to me? So myself and my fiance both got COVID, right? A few months ago, right? A few months ago.
You and millions of others.
I have insurance. She did not, because she had just started a new job. So she did not have health insurance when she had COVID.
That's bullshit too. If you're like in between jobs, you should be covered.
Yes, that's a separate issue. Okay. We both got the same treatment, same everything. I paid more than she
with
did.
insurance?
With insurance. I paid more than she did.
Wow.
And I had health insurance and she didn't.
Wow. Yeah, I just read an article by
what?
Yeah, that makes
no sense.
Makes no sense. I'm sure maybe there's some like government subsidized like COVID treatment stuff for people that are uninsured that maybe helped her or something.
I don't know. Anyway, we'll move on. Somebody in the chat keeps mentioning CNK.
Someone in the chat also keeps mentioning Lisa King, and someone was mentioning Lisa King in the chat yesterday. I don't know where this is coming from. If you have somewhere that you keep seeing that Lisa King's coming on,
who is Lisa King?
I think she's from BBIG.
Oh, yeah. Look, you're right.
What happened?
I didn't.
No, I don't think she is.
I didn't put two and two together.
Vinco Ventures.
Yeah. Guys, we're trying to get Lisa King on. They're being a little bit cagey right now.
But why? I'm saying, like, where are they seeing that she's coming on? Because people keep asking about it.
I don't know. I don't know. They're trying to just wish it into existence.
Yeah, that's fair. Manifest.
All right. Solaire Astoria Cineworld trades OTC in the US, so not super liquid. And why is it up today? I don't know. It's a 50-cent stock. I have no idea why it's up today. It's got like no volume in the US. It trades.
Speaking of manifest?
Yeah.
Where's the Netflix top 10?
I
got it. I'm sharing it.
Okay. By the way, we're gonna have Wejo on in like T-minus 2 minutes. And I just heard from Richard, and he said there may be some noise in the background, but that's okay, Richard. We roll with the punches here on Benzinga. So Richard Barlow, the CEO of Wejo, he'll be on in about 2 minutes from now. We're talking about their partnership with Microsoft. What is on the screen? What is that? Oh, is this the top 10?
This is the top. So these are the top 10 global movies on Netflix. Wow. Don't Look Up. 152 million hours. Again, so Don't Look Up. I'm sure a lot of people have seen it, but we talked about it.
I have not yet. No spoilers, please.
No spoilers. We talked about it. No spoilers, guys. We talked about it on this show, just that this was, to me, the first Netflix movie that they really like went out and paid top dollar for all the star power, right? You got Leo DiCaprio in it. You got Jennifer Lawrence, Timothy Chalamet. Is that who you said? Yes. Ariana Grande. You know, all these people that they... Shelly, this is a different Spider-Man. I don't believe this is the Spider-Man Don't Look No Way Home. Is that what it's called?
Homecoming is the first one in the...
Well, I know. I think she was talking about the one that's on... Either way, it's not the one that's in theaters.
No.
But I would be curious. What Netflix should do is they should put a little, like, their logo next to the movies that are Netflix originals versus the ones that people are just watching on Netflix.
Yeah.
But either way, I really do think that... with which it's not determined now, like what the success of Don't Look Up is, but once we see what that looks like how many total hours were watched.
I mean, that looks like a success right there on the screen. 152 million hours viewed.
All right, fine. We'll deem it a success already. I think that's bullish for Netflix long term, that they can say, hey, look, this blockbuster movie, like a Leonardo DiCaprio movie that maybe in the past would have gone to Paramount or 21st Century Fox or Universal Studios, like some of these big legacy Hollywood studios, are now being hosted on Netflix, that they're effectively and Netflix producing its own content isn't anything new. But I don't know. I mean, give me another like one of these blockbuster movies that Netflix had. I guess Bird Box, they had Sandra Bullock.
They've had a couple. They had The Irishman with Scorsese. That was on Netflix.
That's okay. There you go. But this one is still, the cast is far and away like the biggest cast, at least in terms of like dollar amount they spent on the cast. So I think we'll see more of these. I think we'll see more of these huge blockbuster movies from Netflix. And
yeah, it's Netflix versus HBO versus Amazon versus Apple for content spend. That's what it comes down to. All right, let's bring our guest on. All right, we have Richard Barlow here, lurking backstage. Let's get him on the show. He's the CEO of Wejo, ticker WEJO. Let's get the chart up on the screen and let's get Richard on the show. There's the chart. There's Richard. Good afternoon, sir. How is your Wednesday going?
It's been good, thank you. It's been good.
All right, good. I'm glad to hear. I hope we don't have too much background noise, but we'll roll with the punches nonetheless. So, Mr. Barlow, the news yesterday, you announced a partnership with Microsoft. We're talking about the Wejo Neural Edge platform. I'll be honest with you. I read the press release 3 times. There's a lot of big words in there that I didn't understand. So explain to me simply what the Wejo Neural Edge does.
So there's an explosion of data coming from autonomous vehicles, electric vehicles, and connected vehicles. We're the market leader. We process over 12 million live vehicles every day, but there's a bottleneck. And at the moment, the vehicles don't know when to send the data at the right in the right volume, the right sensors coming across from the vehicle to cloud. We've developed technology within the edge of the vehicle as well as the edge of the cloud, where we've machine learned when to send data and when not to send data, and we reduce the data overhead by up to 80%. So it means that now autonomous vehicles can send more of the right data at the right time. And if there's enough data already being collected, then it doesn't need to send the same data again. So it fundamentally reduces the data overhead, which therefore reduces the costs. So it's huge.
So how exactly does it prioritize the data it's taking versus the data it's not taking?
Well, we've collected over 477 billion miles of data and 12 trillion data points. We see vehicles on 95% of roads every day in the US. So we've already built a huge dictionary and what we now call a digital twin of every city in the US. So we know a lot about the cities. We know to less than 3-meter accuracy the pinpoints of vehicles on roads. You may recall we see 7% of all vehicles in New York. So we've got this massive dictionary of data already built into our platform. So we machine learn when we need more data and when we don't. So we instruct the vehicle in real time when we need more data to update our own understandings, or when actually we don't need more data. So, but it guarantees at the other end when we rebuild the data, we still have 100% of the data quality.
So Richard, I was watching the Formula One show on Netflix, Drive to Survive. I know you're a big racing fan, and I was sort of blown away at the, they go out of their way to tell you just, oh, we've got so much data. It's constant data. It's a deluge of data. And I was sort of like, it hadn't occurred to me. I guess I didn't realize. And, just the sheer amount of data that is being used to gain an edge, like on the track. For everyone else, that for normal driving, we don't need all that data. But can you explain, what type of data we're talking about? Why is it necessary? Why should anybody really care?
So you don't need the data, but most manufacturers do. So to give you a live example, I was driving a car on a track, and the CEO of the motor manufacturer was at the side of the track, and I said to him, "This is the data I've just pulled out of your car. The vehicle burnt through 1 liter of fuel, 1 liter of oil in 20 miles, and this is the engine temperature going up. I can show you how your engine is degrading in real time." And it blew the CEO's mind. And at that point, he said to his engineers, "We need to take that engine out. We need to see what's going on." And that's what data does. It helps OEMs fast track their build of new models. I refer to OEMs and motor manufacturers, but is otherwise known as OEMs. So it helps them fundamentally engineer vehicles quicker, understand which parts are performing and which parts aren't performing, so they can then fundamentally improve the margins in their vehicle, and fundamentally then improve the vehicle experience for the consumer or the driver.
Right. So then the bottom line here, and it's being asked as well in our chat, is so that you got this partnership with Microsoft. How does it translate to real revenue, right, for Wejo?
So we charge motor manufacturers license fees. We mentioned in our business update our first substantial $1 million contract with a motor manufacturer where we charge fees, software fees for processing their data for them. It's not just being a marketplace for data to third parties, but actually where we're taking data for the OEM and we're presenting the insights back to the OEM. We're charging significant fees. So for us, having now a platform where we can say to the motor manufacturers, "Hey, you can now add more vehicles on platform. You can now model through the data overhead is going to be reduced over time. We'll charge you for the processing data. We'll charge you for insights, but fundamentally, we will reduce your engineering costs. We'll reduce your manufacturing costs. We'll reduce your warranty provisions by having more real-time data from vehicles."
Got it. And then the other logical question when people hear about data and data storage is, where is it? Well, obviously it's in the cloud, but like, what are you doing with it, and how do you ensure its safety?
So our mantra is we say data for good, but the data for good isn't just the protection of privacy for consumers. It's also our DNA about how we protect data, how we manage consent of data, how we manage the privacy of data, how we have the security of data. At a more practical level, we're ISO 27001. We've got various cybersecurity credentials. We protect data. That is what we do. Commercially, our contracts with the motor manufacturers is that the motor manufacturers share huge amounts of data with us, and they want assurances that their data isn't going to go to one of their competitors. They want assurances that their data can't be accessed by bad actors. We protect all their data with our own proprietary environment running on the likes of Microsoft Azure.
So is it a situation where like these contracts that you have with these automakers, is it like is it based on the amount of data that they are choosing to give you and therefore ingest, or is it, or like what goes into that?
So there's setup fees, there's then ongoing fees, and then there's transaction fees. So as more vehicles go on platform, we charge more on a quarterly basis. So it's a transparent approach. When we start reporting on our quarterly results, we'll be sharing the number of licenses sold, we'll be sharing live vehicles on platform, we'll be sharing transactions through platform. So you as an investor can model through how we're performing as a business.
Are there other end users aside from the automakers? Are there other people, entities that would be interested and that you would sell this data to? I don't know.
Yeah, I mean, there's a broad term of IoT, Internet of Things, which can be anything. So our focus is mobility, but it's not just mobility of cars, vehicles, trucks. Okay. It can be micro scooters. In fact, I've had some amazing approaches at CES from, say, a shipping company as an extreme example. So if there's huge volumes of data coming from a device, if it enables mobility, then we see ourselves leveraging the experience we've got of processing trillions of data points, of working with great partners like Microsoft, like Palantir, and providing incredible results in near real time back to those vendors.
Is this a situation where like the further we get down the road on autonomous driving, just the more data there is, or are we already at a point where that's not an issue?
No, I mean the one challenge with autonomous vehicles, bar Tesla, is that all the incumbents have invested hugely in vehicles in specific cities. They've now learned one city. They're now going to start offering experiences, in that one city. They want to be able to scale up nationally. They can't do that with physical vehicles. They need to be able to use a platform where you can digital twin any city. We're now doing that. So we're now taking the data assets we've built up. We've developed incredible insights where you can, for example, reconfigure a smart city and see how driverless and driven vehicles would behave if a road was changed in direction or was moved. So autonomous vehicles, electric vehicles, and connected vehicles are all now part of our strategy. And the fact that we can now ingest all that data, provide great insights, but actually provide simulated environments as well, where most manufacturers can then better understand about how the vehicles will perform, is where we see a big part of our growth.
Got it. And so, like, what exactly is the nature of the partnership here with Microsoft for the Neural Edge platform? They're providing the cloud.
Yes, yeah, so right? they're providing a hybrid environment for us, and they're also been incredibly supportive as a partner, where we're going hand to hand to present our combined proposition to industry, and we're getting incredible take up. So Microsoft is our preferred cloud partner, but it's a much deeper relationship than that. We started by using them as a pure cloud environment for storage of data and ingesting of data from connected vehicles. We've now developed a much broader product offering that's now targeted for autonomous vehicles, electric vehicles, and connected vehicles. And we're now working with them to actually show to industry we can fundamentally reduce the data overhead and still provide near real-time results of the data ingested from vehicles.
Would there ever be a situation where, like, as a driver, there was data available that is useful to me in some way, shape, or form? Or is this really we're talking about data that would make cars safer?
No, I mean, I was sat in a vehicle yesterday at CES where a blockchain was used to pay for parking, and that involved the vehicle sharing the location, sharing time in the parking space. and enabling a transaction with a merchant for the payment at parking time. So data fundamentally, and where the most manufacturers are most focused is, yes, that they want to improve the product, the manufacturing, but they want to provide great experiences to end consumers. So ultimately, why we say data for good is that we first of all think about the driver, the consumer of the vehicle.
Right. One of the things I'm thinking about, or I always think about when I hear your company, relatively new to the public markets, and we talk about data, as I think about who like the sandbox you're in and who you're competing with, and I would imagine it would mostly come down to like Google and as like a main competitor.
Yeah, I mean, there's various cloud companies out there. Those are my competitors. There's various supply software vendors in the supply chain of software of the vehicle, who will have visibility of data, but actually they're not competitors per se. It is the cloud vendors. It's the capability of processing data.
Okay, and so what is the timeline look like right now? Obviously, the news yesterday was a major catalyst. What is the timeline going forward for the coming weeks and months as far as deal flow and news flow that we can expect out of Wejo?
So we're going to continue supplying regular news of our partnerships. We're going to inform the market of our results when we issue our 10K. We have an interesting year ahead. We, as you noted, we are now 7 weeks into the public markets, and we are here to keep informing the market about what we do and having solid news flow.
Richard Barlow, the CEO of Wejo, joining us today on Benzinga Live. Richard, a pleasure to have you on. Very nice room you're in, by the way. Very, very nice pictures on the wall. And the last thing, wait, I thought I saw that you're a big Formula One fan. Is that right?
I am. Yeah, I was. I was the one person happy that it wasn't Lewis Hamilton again this year.
Okay, I was going to ask you, do you have like a favorite team or driver?
Yeah, my team's McLaren. That's who I support. But I was pleased it wasn't with the change of regulations next year. I was pleased that the Mercedes didn't get another trophy this year.
All right, Richard. A pleasure. Have a good rest of your day. Thanks a lot.
You too. Thank you.
All right. Yeah, I think a lot of people were happy that it wasn't Lewis Hamilton for the gajillionth year in a row.
Good job on that one, Spencer.
I do my best. It's hard to focus when you've got Jason Raznick in the chat telling people that I should wear a tie. I don't want to wear a tie.
I agree. I think you'd look real spiffy. I think you'd look suave.
I also can never seem to tie it correctly on the first try. It always takes me 2 tries.
Also, Igor, we'll get Cathie back on for you. Don't worry. We'll talk to Cathie. I have a feeling she's not doing many media appearances right now, but down the road.
I haven't seen her.
Yeah, she usually does something on like CNBC or Yahoo. I
haven't seen her for a hot minute. I haven't seen her for a couple of months.
All right, y'all. Coming up, we've got our man Nick Chahine joining us. So if you're into options, you got to stick around for Nick Chahine. He's got his very own product on Benzinga Pro, which is just an awesome inner circle. I'm in there all the time looking at which options Nick trades, and he's teaching me. He's learning me a couple things about options, Spencer.
He's learning you? That's good. It's good to be learned.
Yeah, exactly.
Yeah. All right.
Let's check. Wait, before we bring Nick on, because I want Nick to see this too.
Yeah.
I'll pull up my our bet real quick on Abbott.
Voodoo, I appreciate the effort. It was in vain, but I appreciate the effort. Trying to get us some free lunch.
Those thank you. My options are up 44% overnight on Abbott. Again, the thesis was keep it simple. People are buying the at-home COVID tests. Who makes the at-home COVID tests? That's Abbott. I'm not overthinking things anymore. I'm just going out, acting, doing. Went out, bought the options. They're up. Let's bring Nick Chahine on, see what he thinks about that.
I wonder. Let's get him on.
Is he
here.
ready? Let's go.
Yeah, he's ready. He's here.
A thumbs up or
Nick
something.
Chahine is the author of the Benzinga Options Inner Circle. By the way, you should check that out. I'll put the link on the screen in the chat. Nick, what's up?
What is up? This is my tie. Since you got flack for wearing a tie, I just put on my ruler as a tie.
Wait. Let's see. Oh, his ruler. Yeah. Very nice. Cool. Okay, so back to Robinhood. Back to the AB's Robinhood screen here. So we have Aaron's Abbott option that expires when? I don't even know. Tomorrow?
No, they're the monthlies.
Oh, the 21st.
21st.
It says it right there. Cool.
Don't look at the dollar amount. Just look at the percentage. I mean, 43%. That's like a year. I could do that once a year and be good, Nick, right?
Well, if it pays your bills, sure, but if it doesn't, it's just a scoreboard. So Abbott, from a chart perspective, it should start seeing resistance as it approaches 138.
All right, I'll sell them.
I just said that.
Yeah, but when Nick says it.
Well, if you look left on the chart, you can see that it was significant on January 3rd, 137.25. They bounced off of it and failed completely at 140. And then they went all the way down to wherever they went, and they bounced. And now they're coming back to that January 3rd, 137.3 or so. So and that has been in play before. So, pivotal zones like this tend to be resistance on the way up and support on the way down. So if you want to stay long, just know that if it dips too far and retest the neckline, then you risk triggering a head and shoulders. You want me to share my screen?
Oh yes, please. Let's get the Robinhood. Let's get AB's account.
So Nick, I know you're not going to tell me what to do, but
yeah, I'll tell you what to do.
If you were me,
I'll tell you what to do.
All right. Should I sell the call?
Shut up, Aaron. That's what you do.
Where is share screen? I was like, I'm clicking, it's not coming up. Share screen.
Wait, I'm sorry, Aaron. Finish your thought.
I was just gonna say, if Nick were me and he had this Abbott call, he said he thinks Abbott's gonna run into resistance. So would you sell it?
Yes. So I'll tell you. Right. Well, depends on the time frame. When does it expire? Yours?
January 21st. Not next Friday, but the following.
Right.
Friday.
So the January contract, and how much? What level you bought?
The strike price is. Where do I see it? Well, 139.
Okay, no, I would not hang on to it because that's pretty high up there. So time will be extreme enemy for you.
It's sold.
So here's what I would do. I would take the profits, and if you still wanted to stay long, I would change the risk profile to be not time dependent. In fact, let time work for you by selling put spreads below. So I said this is a line you need to pay attention to because that was this guy, right? And then there's another one you need to pay attention to if you're worried about it losing footing. So if it loses this area, chances are you're going to have some downside scenario, something that looks like this. This looks like a head and shoulders if you draw it that way. Close enough to where losing this neckline would get me out for sure. If I'm long up here, I'm not comfortable. If I'm long here, maybe. So if you were long lower, then you could sell this week's call against it. So yesterday we did that in the live session. By the way, it's going on right now. Yesterday we hit affirm on the bottom, and it was a huge win just in a matter of minutes. And somebody that bought a call could have immediately turned around and sell a call against it for this week and locked their profits. And this morning, the call they sold for this week dies in their favor almost immediately. Okay. So you can turn your long call into a call calendar or a call diagonal, but you bought it way up there. That's too far up there. So next time when you buy a call, don't go that cheap.
Don't go for the cheap the contracts, you're saying?
No, because you are literally putting yourself at a disadvantage unless you on purpose are buying lottery tickets that have very little odds. So if you're buying a call with a delta that's under 0.25, you're giving your opponent, the person that sold you that call, the advantage because there is another person on the other end.
So I'll be real with you, Nick. So I have my what I do for my real investing and whatnot, and then what I do just for kind of lotto YOLO for fun. And that's the lotto YOLO for fun. That's what I'm buying cheap contracts that I think, okay, I think this stock.
So how about this? Let's say you can still do it. So let's say you spend $300 on it. I'm just throwing out a number. Doing 3 contracts or $300 doing 5 contracts. I would rather risk $300 doing 1 contract much lower. You're gonna make money with better odds, risking the same amount of money.
Okay, I like that. All right, I'll talk with you off air. We'll get my strategy down. Down pat.
Well, why not do it on air?
Well, we can, but I see some good questions in the chat. I see
some. Here's a real lotto way of doing something. When you're confident of the level and confident that it's not going to break down, confident of the support, I would sell a put spread that brings in credits and then buy a call or a call spread. Then you're long with the least amount of money out of pocket. Of course, now you're creating 2 levels you can lose at, But if the goal is to not spend a lot of money and have some sort of a lottery ticket, that would be the cheapest one.
Yeah, and okay, so we've got some good questions in the chat. I see Jason from San Diego wants to know how does he hedge his Tesla position? So let's just say hypothetically, I don't know, Tesla is 30% of his portfolio.
Hypothetically speaking.
Let's say hypothetically, it's 30% of his portfolio.
Yeah.
Yeah.
That's too much.
That's so how would you? Well, that notwithstanding, how would you hedge a Tesla long?
Yeah,
I would sell covered calls.
I
would sell covered calls if I have enough shares, all day long. So this was the Tesla trade we did this week. Well, I charted those lines I drew ahead of time, right from around here. I said Tesla's running into resistance. It may dip a little bit, come back, fight for that level, and take off. They didn't dip. They just went up and fought for the level and then took off. So Tesla is doing exactly what it should be doing from a technical perspective. And today, by the way, good job being long Tesla from a fundamental basis. The person asking, I think it was Jason. So we were chatting it up, and I pulled up fundamentals on Ford, GM. I was sick of hearing about Ford. So I said, okay, so Ford and GM create about 140 billion in revenues. Tesla is about 48. Tesla creates, I forget the number now, 12, 13 billion in gross profits. Ford and GM just barely more. Just tell me which is a better car company. So people who still short Tesla based on what Bob Lutz used to say on CNBC are missing the picture. This is a completely different company. So how do you hedge it? You can sell covered calls. And if you're really worried about downside, you use some of that money to buy put spreads or puts temporarily.
Okay, yeah, I think he said that he bought some puts but didn't do great on the puts. Well, the puts are down. So do you need how many shares? You need 100 shares to sell one covered call? You need 100 shares.
This is E-Trade practice platform. I'm not recommending it, but it's a good practice platform and it's a good demonstrator. So when does Tesla report?
Probably in a couple weeks. Probably in 3 weeks.
Let me check my Benzinga Pro.
If I had to guess, I'm going to throw a date out there. I'm going to guess January 23rd. I don't know.
So late January.
No, that's
find out here, actually.
That's a Sunday. I'm going to guess the 27th.
126. You're right. Late January. So
I was off by a day.
126.
I was off by a day.
How'd you know, Spencer?
So that doesn't leave a lot of room to sell calls without taking exposure. So what I would do is I would sell calls no later than January 22nd or go all the way out to like April or May too. And I'll show you. We'll use January 22nd. So if I'm looking, look, I have a sold call here for some reason. This is a practice platform. I don't know why. So 58 and 50. So the straddle, meaning the market makers, based on the pricing today with 16 days to go and the VIX being where it is, they're expecting about $160, $120, $130 of move up or down. So if I'm buying a lottery ticket in Tesla, call or put, that is farther than that from current price, odds are I'm going to lose. That's the idea of getting the plus or minus expected move. So what I would need to do if I was Jason, I would sell a call above that range. Then the odds in my favor. So whatever, beep, 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 beep. So what is, do the math for me. So 100, what did I say, 120. So 1,250. Yeah. So what's going on? Something's happening.
1250 would be your strike price.
Okay. So 1250 would be something I would sell confidently. What?
Right. Holy and so if you have 500 shares of Tesla, then you can do 5 of these contracts.
5. Yeah. So if you have 500 shares, you can do 5.
I'm not sure we're trying to hedge the whole damn position here, but all right.
Right. But check it out. They'll pay you $1,500 per contract if you sell the 1280 call. And that does not include earnings. So if you want,
wait, can we see what's the expected move here? Just out of curiosity.
125, 130. I just gave you a number.
And
the expected move you can get by adding calls and puts at the same place.
Right.
So the straddle is your expected move. So if you assume, quote, market makers are making markets, they're selling everything to make the markets, right? So if they sell the straddle, they don't expect to lose money on purpose. So they don't expect to move bigger than the straddle.
$130 in either direction.
Yeah. Is that what you read somewhere?
And I was asking.
So yes, thereabouts. Yes. So if I sell
1,000 to 1,260 is our expected range based on their earnings.
Yeah. So if I sell this one at 13.15, I went way above 1260. If they're worried about, oh my gosh, I cannot lose my shares, and go to here, then you can still participate long, so to speak, to 1315 plus another 11, because after that is where you stop being long, because you own shares. They'll force you to sell them here, but you collected this much. So that's your quote break even. This is a situation where there's no losing if your entry point in the stock is below. This is okay, I won't participate much further than that. And if you're a person that cannot sell their stock, do not sell covered calls. And you think you are until you get faced with it and you see this one at 50 and you go, oh my gosh, and then you get panicked and then you buy it back and you lose money on. No. If you cannot see your calls get away from you, your shares, don't do it. And by the way, you can do this if you own calls. You don't have to own shares. So if you own calls in Tesla out in time, you can sell covered calls against them now. It's called a calendar or a diagonal. Now they call it something fancy like poor man's covered call, because it rolls right off the tongue. Poor man's covered call. Yeah. I'm being facetious here. So yeah, call calendars work. Same thing. You own a call out in time. If you can afford to buy a call out here for $182, you can sell calls like $10 at a time every week, like we just said. And then by the time, 160, so that would lower your entry cost every time you sell a call and it expires worthless. So it's like a buy right strategy. You've heard that, buy right. You buy shares and you quote write contracts against them. Basically, you sell contracts against them. This is the same thing. So if I buy one of these, and I can immediately sell this week's, or let's go with the one we just know by heart. What we chose, this one, right? And 13 whatever, 1315. So basically, and if I go one, the price of 181, we must have chosen January. There we go. So see, remember that 11 number? So this cost 181, but now I'm only paying 171 because I'm collecting that 11 from this guy. So this does not make me short Tesla. This makes me long Tesla at a discount. So what happens? If I pull the trigger, it's going to cost me 170 times 100. That's how much that thing will cost. But tomorrow, if Tesla drops a little bit, this leg loses much faster than this one. And I'll show you mathematically how that works. Look, today, Tesla is down 1.5%. These are down 6%, right? If you go to January's contract, they're down 16% because of time. Time affects these guys much faster than the one out in time that's in June. So this is a way to get long today. But hey, if tomorrow something went wrong, you're not dead, because this one is going to lose much faster than that one, and you'll be okay. You say, you know what, I'm going to close the whole thing, and then you're not damaged. So that's a diagonal. Because you buy this one, if I had sold one at the same level, it would be called a call calendar. This way, it's a call diagonal.
All right, Nick, let's move on from Tesla here, and let's get to some other ones. Any other trades that you've made recently you have on your radar right now?
Yes. Affirm yesterday was a good, it fell 15% on no news. I think the rehash of some lawsuit, blah, 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 about some securities, something that doesn't have to do with this operation. So Affirm, we nailed an entry point, and I don't know what it's doing right now. I said I should book it. So it is, if you go to maybe 10 minutes, you'll see it. We got in somewhere here. We got this, and it was a big payout intraday. If you use options, it's a really big payout. And so now we have two opportunities we're basing on a bad day. I would stay long Affirm if I didn't book my profits. And down 15% on a rehash on a headline, I think is an opportunity. Let me take out my drawings and go to a daily and see perspective. So look, yeah, it does have some more of the gap, but this is not a necessary gap to fill because of this level. That's my own interpretation of gaps. You can argue that it has many head and shoulders and it's still not done falling. Long term, it's a decent entry. Today's CRM was a good win for a couple of people in. So it's falling on a downgrade from somebody to neutral. UBS downgraded to neutral. Yeah. That's a great reason to not capitulate. The only problem is that technically this looks like a head and shoulders with this target down here. So if I get long CRM, I don't buy calls. Affirm, I bought calls. With CRM, I would sell puts into fear. And I believe the person that brought it to my attention sold puts under 200. And so they collected the credit, and then the stock moved up $6 off the lows, and now it's reverting back to the lows. So I would prefer to sell put spreads, so I don't need a rally to win. That would be step one. And then when I find stabilization and a technical reason to actually expect upside, I would buy a call or a call spread. Similar scenario with another stock, I'm drawing a blank, who also got downgraded today. Sorry.
There was a bunch.
It's on here. So it's on here, one of these. CRM and Roku.
That was,
yes.
I was going to say.
Okay, so Roku, those are live windows, by the way. If you become a member, you too will be spending the day with me live. I'm sharing my screen lives all day. That's new, by the way. And it's first 2 days were 2 big wins back to back. So Roku, similar setup, but not quite. It's been down on its lug because it's Cathie stock, so to speak. It's inside the ARK-K. If you look in the top 10 ARK-K holdings, they're the great companies. They're just hated right now, but it's like they're gunning for her or something. It's weird. That includes pretty good companies in there. So now Roku, you have 2 lines to worry about. This guy right there and this guy. And anything ping pong in between should be limited. So I can get long Roku against that and stop out, or stop out against that. Depends on how fast. I have a note to myself to look for longs, and it's pretty darn close. So when I hang up with you, I'm going to be looking for longs. To go long Roku, I would sell a put to own shares, or if I can't, I would sell a put spread. Again, I don't need a rally to win. I just need it to stabilize. And then when I find that it's actually, I have a reason technically to expect upside, I would add calls or call spreads or shares in order to capitalize on the upside move. Otherwise, I don't buy and hope for a rebound. I buy into a support. So if I can buy shares or calls, I can say, okay, it's falling into this level, then I'm okay with that, because then
because then you know you have your out.
Right. If that level fails, then you know I should be out. Otherwise, you're just hoping for the best. So I say it: no trigger, no trade. NTNT. Yeah. Put it on the sticker. I may have said it on your show before. It's really silly. Hey, make it one of your what do you call that? New Year's resolution. No trigger, no trade, and always set a stop loss. Always. So whenever you get in, set a target exit and a target in a good way. Like, okay, if I gets to here, I should start booking 15% or more. Set a stop, say either an amount of money, like if I lose X dollars or X percent, or if the stock loses that level, I'd be out. So this way, you avoid those. Oh, I bought a call and now it's down 50%. Then you leave that scenario to only like a big whoosh down. So like, don't chase. Like this morning, somebody came to me, BYND. I said, do not get long the pop in the morning. Wait for it to fill the gap back down. And it didn't fill the gap and then some. So yeah. Clearly that whoever bought it here, what did they not do, Spence?
A lot of things, Nick.
Set a stop loss.
Well, no, one thing.
They could have set a stop loss.
One thing.
They probably didn't scroll left.
They didn't look left. Yes, I did give you a hint. I did this. They did not look left. I would never go long a stock at a place where it had an accident. You just bailed these people out.
Thank you for that.
What was that? Is Rodrigo here?
No, that was
I wish. We should get Rodrigo on soon to talk about.
So stuff. Whoever bought this here, they bailed these people out.
Yep. Yeah, you're right.
So next time it comes here, wait for them to breach it and chase it. Technically, it would run up to above here after it breaches and closes.
ALL, always look left. We're just going to make
I like that. ALL. I almost typed ALL. What ticker is that?
Always look left.
No
like
trigger, no trade. All right, Nick, what are some good setups you like right now on the long side? I'm looking to I just sold my Abbott call.
CRM and Roku are good knives to catch. long setup, I'm going to bet on the beatdown market of the small caps, and I'll tell you why. This is a strategy decision for the whole market. So this is a weekly chart on the small caps coming up. Come on, TradingView. There we go. All these lines are just alerts for me, so ignore them. So the S&P closed the year at an all-time high, is breaking records right now. They can't go far if this one is in correction territory. So we need this one above 230. So then all markets can participate upside. So if you turn off the news, nobody should be shorting stocks, because whatever is going on in the companies is delivering excellent P&Ls. However, Friday, I'm going to give you a caveat on Friday. I'm going to tell you, look back at February 5th, 2018. We got a jobs report that was too hot. Freaked people out, thanks to Art Cashin on CNBC to call people out. They told us that if the TNX hit 3%, the Earth is going to stop rotating. And of course, it hit 3% and we were fine, but the stock market corrected the first time. They repeated the same thing in April, early April, jobs report, same deal. It hit 3.22. They said if it hits 3.25, that's it. Well, the TNX now is 1.7, 1.68 and rising. I think if we get a jobs report, look for 2 data points on that. Unemployment lower than last month, which is 4.2. And that's the important part. Also strong participation, or not weak participation. If you get these 2, I think stocks should freak out badly. According to the rhetoric, because it's good news for the economy, but then it gives you the impression that the Fed needs to be aggressive in rate hikes and such. I think the Fed will not be aggressive in rate hikes, so I will buy the dip if it comes.
Got it. All right, I'm just catching up with the chat right here, seeing if we've got any other tickers that we want to look at while we've got Nick here. Again, the link is in the chat to Nick's Benzinga Options newsletter.
So a couple of things about that. It's not just a newsletter. It's not a trade alert. I promise you it's a learning experiment. So these people here, I have 180 right now in the room. And we're not only chatting, and we have 3 tabs of 6 windows each. The whole market. Now they're looking at these screens right now, so they're figuring out what the hell's going on. Why is he jumping back and forth? So this is do this, do that at this level, intraday setups, and we have rarely had losses there because it's just like an active trader's perspective. But the amount of learning we do here is tremendous. And then setups that I write up almost every day with 15-minute videos. I do share setups, trade setups, but it's not a trade alert service. You can use it that way, but I think the education piece is the more important one. Plus, you guys offer a money-back guarantee. I would imagine you still do. We've been working together 10 years, 11 years.
Correct.
And,
yeah. Right. You've got a 2-week free trial on Benzinga Pro. If you buy the options newsletter, you're not going to want to cancel it. We'll just say that because it'll pay for itself.
Right. It's so my job to keep you on. It's my job.
And that's my favorite part about it, Nick, is that inner options chat circle we have in Benzinga Pro, because anytime I'm looking at opening an options contract, I can just throw it in there and people will tell me very quickly why they love it or why they hate it. And a lot of times it can help me, guide my decisions. I make some good trades sometimes, but it's always good to get the input of, some people that have been doing it longer than yourself.
What's it worth to you to pop into the chat and say, Nick, I have this trade, I'm stuck, what do I do? Or I have this win, how do I manage it? We're doing this all day, every day. I'm literally stuck to my chair all day. And my watch keeps saying, get up and move. So it's a lot of work on my end, but I'm seeing tangible results from the 180 people that are in here. They've become so much better traders. 179 now. Somebody got
I agree that's the biggest value, Nick, is because there's no other room you're gonna get that in where you can have access to I'm not gonna say 24/7, but throughout all market hours. That
I've answered questions off hours last night. I guarantee
SA in the chat's asking what room we talking about. So when you get the options newsletter from Nick, you get included into an inner circle options chat in Benzinga Pro, which again, to me, that's my favorite part about the product. Yep. It adds a lot of value to me. So,
and the gang in there is pretty good. So sometimes if I'm away from my PC and somebody asks something after hours, I can guarantee you somebody will jump in and answer. Yeah, I saw that. Here's the link for it. Oh, and by the way, Sundays we do a 2-hour webinar free in the morning charting tickers, and usually it's 100 to 130, I think 135 tickers 2 weeks ago. And I provide a spreadsheet with links to all and comments every Sunday. It's a lot of work for me. I promise you, the money you pay to get in, I don't know how much it is. You get your money's worth in a week. But it's almost like if I was pricing it for myself, it would be nowhere near close to the deals you get here. So the money is not. If you're a serious trader that wants to go from being a home gamer to having pro level habits, you owe it to yourself to take a peek. You can't make it free to try, because when I try something free, I did it with Symbolic, great platform. They opened it up for me for free for 2 weeks. I didn't do anything with it. Had they made me pay for it, I would have used it. Like pay for it and then we'll cancel before it kicks in. I would have tried it, but it was free. I wasn't engaged, so I had nothing to lose, so to speak. And now I didn't use it. It expired 2 weeks and I didn't use it.
Yep, and I just dropped that link in the chat. Again, it's on the screen, but if you go to the chat, you'll be able to click the link. That's the premium options newsletter again, and then you get access to that chat circle in Benzinga Pro. So if you're like me and you're learning how to trade options and you want someone like Nick who's an expert and to be able to ask questions, how do I hedge against my Tesla position, all this, this is really the best place to do it.
So there are some people trading Roku right now, so I'm updating for them. They're looking for an entry point. I know somebody sold some puts here, but they're out in time, so they're not worried about it. I'm looking to get off here and share a trade setup for Roku, just catching the falling knife, and it's more of a trade than an investment. Now, so we're looking for them. When do they stop selling pops? Because that's what the machines are doing now. They're selling pops until the mode of selling pops is over. So this is where you have to know what comes next. So is this a buyable thing? Not yet, because they've been selling pops. So you want to see them beat a level that is significant intraday to say, okay, now I'm comfortable believing these pops here, maybe. So that's what goes on all day.
All right. The link again is in chat. It's in the description.
Wait, we've got Nick for 2 more minutes, and I see Microsoft in the chat. So if we've got time, Nick, let's do Microsoft real quick. Sorry, Spencer.
Okay. I just looked at it. Somebody asked me in the chat room. So it is falling into support. Weekly is not going to tell us much. Let's go to 240 and reset. So you can see how it's falling into support. So it's not an easy short here if you're looking to short it. If you're looking to get long, you can. But know that I can make the assumption that support will hold should the market hold. But if it trips below this one, caution, I would get out, because I'm pretty sure I will have the opportunity to re-engage long here. And that would be an excellent place to start looking for longs. So if you treat every trade like it's the end of the world, look for longs. I'm doing homework too. I'm not wasting time. So this should be stop out, re-engage. Not every trade works out. Let me see my lines. Am I consistent? Okay, so it is a zone, supportive loss, new leg lower, and then I have a buy the dip opportunity just below that. This would fill the gap. I'm not a gap kind of guy, but markets are. People chase them. So you have support. Now that becomes resistance. We're updating. So you have support below, resistance above. If you buy it and you get a pop, and the pop goes into 331 and above, I would exit. Or lock. So if you bought a call, sell a call above it. And that's a pretty good trick that yesterday I shared. So somebody yesterday bought the bottom in Affirm, bought a call, and then Affirm rallied. They could sell a call above it and get a credit overall. So then they own a debit call spread, which is bullish trade, for which they got paid to be long. And that rarely happens, which means the worst case scenario is a credit. And the best case scenario is that credit plus $4. It was a $4 white spread. That's how you lock profits.
If you want this all day, all up in your screen, in your computer, in your brain, check out the link. Description, chat. It's even on the screen right now. There it is. Benzinga.com/premium.
Oh, did you see what's behind me?
Yeah, you got your banner.
Yesterday. I was like, what is that big box?
You got your banner, finally.
Representing.
Excellent.
I should probably take the gun off the wall over there. Probably.
Yeah, maybe.
We didn't even notice it.
Now you do.
Till now.
no, everybody's looking at it.
All right.
It's a toy.
I love you, Nick. Thank you for coming on. As always, it's a pleasure to have you. Again, you want more, Nick? You know where to find it. I'll drop that link in the chat one more time. Give it a try. Like Nick said, you got no reason not to.
All right.
Got money.
Thanks, guys. I appreciate it.
All right. See you, Nick. Hey, all right. Before we bring on Jesse, Shelly was reminding me in the chat. It's been a hot second since we've done a Guess That Chart segment.
Ooh, let's go.
I've got I've got a chart queued up, ready to guess.
If you guys are new here, guess the chart. It's like back in the day when you used to watch cartoons on Saturday mornings and you would see the guess that Pokemon. This is that, but it's the stock version. So we're gonna throw a chart up there without the. Are we gonna have the price access or no?
No price access to start.
No ticker. All you got are the lines. What chart is this? First one to get it gets a free piece of swag. Some Benzinga swag.
Benzinga swag from the swag store. We will bring the prices up at some point, but this is a 1-year chart of this stock. 1-year daily chart. We'll give it a minute, and then after a minute or so, it's not Tesla. It's not a terrible guess, but it's not Tesla.
It does kind of look like Tesla's chart.
It's not a bad guess, but it's not Tesla. It is definitely not Ford.
No, because Ford would be way higher than those previous highs.
Oh, come on, Michael. Space. No, come on, Michael.
Okay, it's not space. Can we get a hint? Can we get a sector? Would that give it away?
Can we get a sector?
Or how about this? Value versus growth.
More towards the value end. What sector would this be? Like
am I allowed to guess, Spencer? I don't know what it is. Full disclosure.
It's not a HubSpot. It's not NUE, Apple Gym. Wait, what sector would you call this? Would you call this an industrial? I'm honestly not even sure.
Home Depot.
Okay, no, it's not Home Depot. It's not Caterpillar. Okay, I think that's enough guesses. Let's bring up the price axis and make it a little bit easier here. Okay, hold on. There we go.
Ooh, 217.
Let's make it go back. There we go. Make it. Maybe that'll help. Maybe it won't. I don't know. Alibaba, no. X, no. Here, I'll be honest.
I was thinking Walmart, but Walmart's like 150, so it's not Walmart. Costco's a good guess. Call me now.
Costco's a good guess. It is not Costco, but that's a good guess.
Bowen, we've already done Bowen on the guess the chart. I actually got that one.
Deere, good. Not a bad guess. So I'm seeing a lot of Boeings. Nope. The stock is in the S&P 500. We have a winner. Hey,
UPS.
Let's zoom out.
Is it UPS?
United Parcel Service. UPS.
I didn't know that's what UPS stands for. The more you learn.
The more you learn.
Chodgi?
I don't know.
Choji? Choji.
No idea what that is.
Send us an email. shows@benzinga.com. We'll get you your swag out to you.
Chaji. shows@benzinga.com. Email us. It's in the chat. You have won some free swag. Congratulations. Oh, you won a couple weeks ago? Did we do this 2 weeks ago? I don't even remember.
I don't know. Did we already send you some swag? If not, email us. We'll get you some out.
All right, let's bring on Jesse Kaler. Let's get his thoughts on things. Jesse, what up, man?
Hey, what's up, everybody? How are you?
How we doing?
Put on the tie for Jason. Just to spruce it up a little bit.
I don't. We don't wear ties to work over here. Maybe we have to start now that we have new owners. I don't know, but oh, I lost your camera. I can't see the tie. Uh-oh.
There we go.
All right, we're back.
Yeah, I have a glare, and I tried to move a little, and we had a little mess up there. So,
no, Proton. I think Chaji had you by a second there in the chat. But anyway, Jesse, do you want to share your screen? What's on your radar right now? Oh, but you seem like you have a hot take to my talking about Unison and home equity earlier. You seem like you were fired up about that. Maybe you weren't. I don't know.
You mean talking about the way our parents were buying houses and things like that when I said that?
Yeah,
earlier?
yeah. I said I'd be willing to give up some equity in return for some help on the down payment.
I don't know. Okay. I feel like down payment is definitely a struggle for most people. I agree with you there. And I don't know. I'm kind of mixed on that. That's a hard one. I'd have to think on what I'd have to see which way would affect me more. But
all right, let's bring up your charts here. We got Ford.
Yeah, I just want to talk just for a second about Ford, because we had in our we have the Discord server that everyone can jump into and take a look at. But we had a member that started with significant losses. We're talking, for some people, 30,000, things like that. And then since then, in about a year, we've talked about this same person, and we've talked about the move all the way since April, even with you guys on the show, that we took the Ford covered call approach, where we were buying the hundreds of shares or buy 1,000 shares, whatever your price target is, and then your account availability would be, and then writing covered calls to support that trade. And if you would have done that in April, you were talking about $12. And so a $1,200 investment would have been, now we're all the way up in 24 to 50. So you would double your money. And while you were doing that, each one of these candles represents a week. You're making money on the covered calls that expired worthless. And as soon as they were to, let's say that they break past your selling, like let's say you were buying at $12 and you were selling the 14s. Well, once it goes to 14 and initiates, well, you can take that $2 profit and you gain the premium, and you're going to be able to just rebuy the shares again if you catch maybe a dip, which you can see it gave you opportunities as it went up. It definitely gave you an opportunity, slowed down, and then they started buying it back up again. So you had these weeks where you could make money, and you're talking, if you look at right now, especially on a day like today, if you see how these happen, 1, 2, 3, 1, 2, 3, and then you're looking at, okay, the premium on these calls is going to be exaggerated now, and now you can make some money by selling these, and you don't have to hold them all the way through. So I wanted to kind of touch base on what Nick was saying and how you can protect yourself, but also I would say you would want to go in with a process of, am I writing the calls, am I selling these to protect myself, or am I selling them to wait out the expiration to collect the premium, or am I just going to take a trade on it, and because you can sell them and then close them before the expiration as well if you're already in the profit. So there's got to be a reasoning in your head of, why am I entering the trade, and what am I trying to do with this? So this was just a good moment that I wanted to touch base on, because now everyone in the group's like, well, what do we do now with it? How do you?
Yeah, well, getting in is always the easy part, right? It's getting out that's the problem.
Yeah, because some people are like, well, what if I get out and it's at 26? Well, then sell $26 strike calls, put a stop loss in place that would be a less loss if it was to retract back down than what your profit would be on the calls that would expire profitable for you. So if you're going to make $400 in profit from the calls that you sold, well, you want to give yourself some type of risk ratio. In my opinion, that would be like a 1 to 2 to the downside for your remainder of your position. That way you're not taking too much of a loss if the stock goes down to 22 and you're only making $400 in options, but you lose $2,000. That's not a good trade.
Yeah. All right. So we're in Ford.
All right, and then Bank of America is one that we've been
another strong performer
taking positions in on the pullbacks, but it's at another level here where this is a potential breakout area. If it can get out and get above 50, then you might see another few bucks out of them, and might see Bank of America at the end of the year, in my opinion, in the sub mid 50s, like 53, 55 in that area. That's where I think they're headed. And if obviously they break down, then you have a risk all the way down to 44 if you're looking at the chart. If it's not obvious to you, then use these fun little tools that you have on most of your platforms where you can say, okay, if I was to get in right here, where's my risk? It's all the way down here, in my opinion, all the way back down. So you have 3 points, 3.82. So basically 4 points to the downside. And you have the risk is going, or your profit is going up above 50 where it's set on mine. So I don't know. It's just one that if you're looking to get into the banks, we like that. We talked about ITUB the other day. I thought you were like, never heard of this one. Hey, look, we got that little 50, 60 cent bounce that we wanted. When I said, hey, if you buy in the 340s, then you get a little bump, but it didn't do exactly what we wanted. We were hoping to get a 50% retracement from the 555. So that's one that we'll be watching if you're interested in some cheap stocks that have been getting beat up.
There was someone on the chat. Was it Alan? I forget who was asking about RAP a lot. Can you look at RAP here? WRAP, right? That's RAP. Yeah.
Ew. Looks like that ITUB chart. You're at technical support for a long-term entry. If you go down to the 30 minutes here and just kind of see, it's choppy. I don't know what the volume that you're looking for, but the volume is nothing there. There's nothing there. So I wouldn't trade this stock.
Okay.
Yeah, I don't like it. If the charts look like this when you pull them up, in my opinion, it's a red flag. But
just because not enough liquidity, not enough volume.
Yeah, I don't want to play around in that pool.
All right. What about WTFC? Wintrust Financial, great ticker. WTFC.
This one
is that an all-time high? No. Yeah, no. It's close. Wow, it's close to an all-time high.
Still liquidity issue, but
I mean, yeah, you're right.
$100 looks like the area that you maybe possibly enter a short position, is what I see. But if it breaks past, you'd want to have a tight stop loss, and then it might continue to keep running. But I look at this chart and see a short position.
Okay.
Because you're getting ready to hit these tops here. The
stop would be at
right above 100.
Yeah, right above 100. Oh wow. Yeah, whoever just called that out in the chat, Christian Adobe. Wow, down almost 6% again today. Ooh, Adobe's had a rough start to the year. Growth had a rough start to the year, but look at Adobe.
I can actually say that our company and we're not using it. We canceled our Adobe. We had the full package worth everything you could dream of for any type of creator in the world with the animation and all that. We got rid of it. It was just too expensive. Wow. And there are other alternatives that you can pretty much get the same job done, or it's even cheaper just to pay someone else to do it on Fiverr than it is to have a team.
I mean, frankly, we use Canva.
Right? Yeah, that Canva is great.
It's fantastic. It's freaking great.
It does a lot for you. It makes it very user friendly.
It's cheap. It's
quick.
Affordable.
It's like $10, and you can add like team members for a couple bucks extra. So free plug for Canva if you get out there and join Canva. But this is one that I was talking about in the group that I'm surprised it's holding up here. I know the market's helping, but Carnival Cruise Lines. All I've been seeing is nothing but negative on the cruise lines.
And yet the stock, the stock seems to not care, right?
I thought that it was going to just get smacked this week because of all the negative headlines. I had friends that were on vacation on a cruise that went on a honeymoon that got COVID right when they came home. They had COVID. They were talking about how they're ready to board members for the next cruise as the people are coming off. They're reloading the ship without any time frame between for cleaning, it seems like. So I don't know. It just seemed like it was just going to be an easy short, and it was not. They were up $1, I think, on Monday, and then they've kind of trickled that back down, but it's not an easy short. It hasn't been an easy short, but that's what I still think that when you look at Carnival Cruise Lines this time next year, I believe it's not going to be any significantly higher than it is than it is now, and I believe it's going to be I think it's going to be under 20, but we'll see. Anything on the in the group here? Let's pull up
what is this one? That's not a ticker, so never mind. We're not gonna talk about that.
I did talk Meta in the chat, and I don't know if you've looked into what their investments, what their holdings are.
No, but not recently, at least.
Their top 10. Let me pull it up. I know NVIDIA, Apple. So it's NVIDIA, Roblox, Microsoft, Unity Software, Meta Platforms Inc., Amazon, Apple, Qualcomm, and Tencent Holdings, Taiwan Semiconductor. So these are all names that we know. The average percentage change since they were in them is over 400%. So it's one that I'm looking to continue to hold for a long time and continue to buy more on these dips. I had a 5% dip recently. So this is, if you can see on the chart here, 1450s might be a good area to start getting in with the tight stop loss if you're one of those people that are doing it as a trade here. But if you're wanting to gather some shares, 1450, and then you got $14 down here, and then anything under that, then you might just say, hey, this isn't working out. But
out of curiosity, because just I haven't looked, like, how can you pull up an intraday, just like how liquid, how much volume is in and by the way, this is Meta, this is the ETF, this is not Facebook, this is Meta, the ETF. But anyway, okay, so all right,
it's got potential.
Yeah. Right. I'm just curious.
Their net holdings that they had went from 38 million in Q1 of 2021 Q2, and then the Q3 it went up to 148 million. So they've gained 110 million in one quarter.
Yeah.
So I'd like to see what the next quarter results show, that they're how much are they really growing.
All right, what about Pinterest here?
Pins.
Someone who's in the chat, Business Mogul T, is asking about Pinterest.
So, Pinterest was something. Let's look at it as like a social. What it is. So let's see how many people in here, if you're listening, think to yourself, how many conversations do you have about Pinterest if it's not the stock pins?
I don't think you and I are the target audience for Pinterest,
but my wife isn't either. She's on Instagram, TikTok, all that stuff that's getting more and more. People aren't. I feel like Pinterest is maybe like a 40s and up more than it is even like a 20s and 30s. That glare.
Maybe. In theory, I should be on Pinterest a lot more now because I'm like planning a wedding, but we don't talk about it, to answer your point. So no. Not really.
Yeah, I just don't see. And where are they making money? Just the advertising, or is there a subscription for it? I don't even know if there's
got to be some subscription, but I would assume most of the ads. Yeah.
And it's like, you can get most of that information on YouTube or on other areas where people are blogging and talking about things that they're doing. And God, that glare is killing me. I'm going to move over a little bit. There we go. Here we go. I'm out of that glare. You can still see me, right?
Yeah, we got you.
All right, sorry. But I mean, I just, as a trading standpoint, I'm not interested in pins. I just I don't know. It's fallen from 38.50 down to 33. You're going into oversold territory, finding a level of some support. It didn't break that low of 32.50. I'd hang out and watch for that 32.50. $34 to the upside. So.
Same story here. I mean, software is just brutalized here. Someone asked about Teams and HubSpot. I guess you could try to find some support, but like, why would you even bother trying to catch a fall? These are falling knives. These are, and yes, can you say they're oversold? Sure. Maybe the RSI says they're oversold. I have no idea. But like, why even bother trying to catch a falling knife on HubSpot or on Teams? It's just been, if you're in it for a long term, you're being in it for the long term. But for a trade, on the long side, I can't see it.
Now, here's a chart that looks like something that I would say X. This is one that you might want to start looking into buying on some pullbacks, because if you bought on every pullback over, let's look up the last. Right here, you're looking at $22 was a good area to start buying. If you can tell there, it just hit there every time, bounce back. It's on its way up again. You might have, another top coming in here and it's on its way back down to 22 if it doesn't break out above 28. But this has been a great performing stock.
So sometimes it really is just as simple as finding the sectors and the industries that are in favor.
Yeah, and sometimes believing in what's going to be around in 10 years is a big thing I tell most friends, family, anybody, if they go, what do you think about this stock? I go, do you think they'll be here 10 years from now? Do you think that you'll use their products, or do you already use them? Are they profitable? What do you know about them? Why are you wanting to trade them? These are the things. Why do you want to invest your money in there? Is it because you heard about it on TikTok, or is it because you believe that, Amazon's going to be still producing at a high quality, and 10 years from now, you're going to still be using Amazon.com for these things? Or are you still going to use Facebook, Apple, Netflix? Are there going to be bigger dogs out there? Are you still going to use Shopify? What are you going to use? That's the big question.
There's a theory about that. I forget what it's called, but it's like companies that have been around for the last 50 years. Basically, it's like the longer you've been around, the greater the likelihood that you will still be around, right? So like companies that have been around for 50 years are like almost guaranteed, not all the way, but almost guaranteed to be around for the next 50 years, right? There's some study research behind that, right? Just longevity leads to more longevity. It's kind of obvious, but like,
well, yeah, and it's almost to the point of you're saying, okay, that name is familiar, so therefore I trust it. Why do I trust it? Because it's been around for 50 years. Do I trust it's going to be around for 50 more years? It all sounds logical. If you say this company's been out for a year, I don't really trust it. I don't know if they're going to be around. I have all these concerns. They're new. It's a lot of money. These are this is what you're worried about. This is what you say to yourself. And then you got to tell yourself, what kind of risk are you trying to put on here? And is this money that you're okay with losing? And if you are, then go into those speculative companies. And I tell people, I think that's a great way to diversify yourself. Put yourself, if you want to pick 10 companies, put yourself in 5 companies that you believe in, and 5 companies that you think have some high potential over the next 10 years that could do something in this maybe it's a metaverse play, or a semiconductor play, or you're even trying to get into some of the pharmaceutical companies because you think that there's going to be more and more COVID-19 like situations happening in the future. Speaking of that, I don't know, just curious, have you ever heard on your radio station, in the chat, please help me out if you have too.
No, I'll stop you right there. No, because
you don't listen to
I
radio.
haven't listened to the radio in God knows how long.
Well, if you heard, if anyone in chat has heard this, but I've been having on a local radio station, it'll come out and say go to ready.gov, and it's a commercial telling you, what if you were cut off from communication with your family? Do you have a plan? Do you have a like a backup plan for a massive global event, or whether it's pandemic, or like losing like an EMP, loss of power, or something like that? And it says it's backed up by the it'll say at the end, backed up by our federal safety program, whatnot. But it's just something that I have never heard in my life that said, hey, are you ready for a tragic event? You can get onto a government website and learn more and buy packages of being safe. And just it's kind of something.
You probably heard that because of what happened in Virginia over the weekend, or Monday in DC, where there is the people stuck on the highway overnight. But I don't know. I've never heard of that before. But now that you mention it, I will definitely check it out, because seeing that traffic jam, seeing people stuck on I-95 for 25 hours, it's a good idea to have some emergencies.
Makes you want to stop at that gas station before it hits E, doesn't it? It makes
I'm so guilty of that. I will proudly ride until it says 2 miles to empty, 1 mile. That's a thing. That's a game I play with myself.
All right, Jesse, I got a couple charts I want to look at real quick. If you got 3 more minutes,
I got all the time in the world.
Because we got to wrap up at 2. Yeah. So we're gonna let you go at like 1:57. But we got
and we have the Fed minutes. If anyone cares, I don't care personally.
Yeah,
pull up the stocks.
I really don't. No, you do. I really don't care.
You kind of care.
I don't. What charts?
Oh, what charts? Marathon Oil.
MRO.
So, do I believe in oil coming back, or do I believe in the energy sector? I won't give my opinion on that, but I will look at the chart here. Let's see. So 1411 to the current position, since we put in a new high, this would be where I would look for a 50% retracement for entry. So I would try to get in somewhere around the 1650s if it was to pull back and give us a chance. If it makes 1650 its actual new move, then I would say that you're set. Like, you might get a pullback to this candle here and get into 17 areas in the low 17s, and before it moves back up and tries to take out that high. You broke past here, so this is a good sign in my opinion. So I would want to look over and say what's to come. Like, I like to look at previous data, and on this one, is it an all new high? Looks like it. Since any time that would make any sense to me. So you're breaking out to all new highs. Don't short stocks making all new highs. This may be something that you just buy on those pullbacks.
Wait, it's making new all-time highs, you said?
It's making them on as far back as I would normally go. Let me go. Never mind.
I see. I guess back in 2018, it was at $23 a share.
Yeah, since relevance, I mean, to me, I'm not going to go back and look all the way to.
I just thought the chart looked strong. I'm like you. I have my stocks that I buy long term, and there are certainly no oil stocks in that category of stocks that I like long term. But as a trade, I'll trade anything. You know, then this one was on my radar, and let's just wrap with that today, and we'll do more next week.
So you can sell the $5 out of the money and sell the $5 out of the money on both ends, and just straddle that and play it both ways. Make some money.
You want me to straddle? So you're saying if you're straddling something, you don't think it's going to move a lot?
I think it's going to stay between $23 and $10. So on this one, it's a big range. So you'd want to go to if you're playing like a weekly.
Eduardo, Marathon Oil Corporation, ticker MRO. Mary, Rodrigo,
Oscar.
Oliver.
So, yeah, I don't know if the $15 puts are making any money, or the $20.
No, they probably are not.
They're too much out of the money, but
I don't know. I don't know if you would garner much premium with that spread, but I'll take a look at it. I like it.
I don't think you would either.
All right, I take your word for it. I liked it a little bit on the upside in the short term, but if you're telling me not,
I like Gush.
Okay.
And just play the whole entire thing. Play the.
This is the producer disclosure where I let you know that this is a leveraged ETF, and you do not trade leveraged ETFs if you do not know what you're doing.
Yeah, not a long term, but this is a trade if you're going to be doing your options trading, because you're going to get some premium out of these bad boys. But it's more like a Tesla or a Moderna when you're playing those higher premiums that are going to cost you a lot of money to play. But looks like my time's up. You guys, see you guys next Wednesday, possibly. Let me know, and if you guys
catch you next week.
Tell everybody, jump in, grab my link, get into the Discord with us, and you can chat with me just like Nick.
Yeah, the link should be in the description, right?
That
was me.
That was you, man. Did you put it there? Jesse, drop the link in the chat for us real
Demotion,
fast.
one demerit.
SMH.
One demerit.
That's
-5 points for Gryffindor.
And 10 points for Aaron.
See ya.
Jesse, put the link in the chat for us. Thank you very much.
Yep, I will. Thanks, guys.
All right. Hey, it's 1:59. T minus 1 minute till the 5 minutes, but we got to wrap it up here. We got the roadmap coming up live, guys. What is going to happen to NFTs in 2022? That is my question. I don't know the answer, but the guys on the roadmap, they do know the answer. So if you want to know what is to come this year in NFT land, tune into the roadmap coming up next on youtube.com/Benzinga, also available via Twitter Spaces. Chris, Maz doing their thing, talking all things NFTs. Check it out. This video will end and redirect straight to that stream. Thanks to our guests today. Thanks to all of them. Thanks to Jesse. Thanks to Mr. Nick. I don't know why I called him that. Nick Chahine. Thanks to Richard Barlow, and thanks to Al Lord. Thanks to all of you in our chat. Hit that like button. How many likes do we have? Thanks to everyone for their participation today, but we're not at the amount of likes that I want to be at.
Daniel, are you talking about the football club, Chelsea? I hope so. Lukaku said he's coming back, so that's good.
All right, it's 2 o'clock. That's a wrap. Hit the like, and roadmap live next. Aaron and I will catch you tomorrow.
Peace.
How do we end this show?
Is the redirect set?
Redirect is set because I said it.
Beautiful.
Actually, no, I didn't, but I checked. It is set. Have a good one, everyone.